Good morning. Good morning. Welcome to the Finance, Audit and Risk Committee meeting of Tuesday the 28th of May. Bit of a change being in this chair because we now have scripts. You're aware that the meeting's being live streamed. Please speak one at a time and clearly so that the thousands gathered around their laptops, computers, mobile phones are enabled to be the happy beneficiaries of your wit and wisdom during the course of this meeting. Are there any apologies? I have one from Councillor Morris. I have another from Councillor Brown. Are there any other apologies? 1, 2, 3, 4, 5, 6, 7, 8. Who are you missing? There being no other apologies, can I have a mover and a seconder for the resolution? Moved Councillor Larry Baldock, seconded Councillor Kelvin Clout. All those in favour, please say aye. Aye. Against, abstentions, carried. There is no public forum, no request to speak at the public forum. There is no chairperson's report. Just a note that I hope you've all read the agenda. I have no notice of any late items. Are there any late items? There are no late items. Confidential business to be transferred into the open. Has anyone anything they would like transferred from public excluded to open? Moving on. Changes to order of business. In which case we move now to the confirmation of minutes, matters arising and adoption of recommendations. So, we have the minutes in front of us. Do I have a mover? A mover, Councillor Kelvin Clout. Seconder, Councillor Catherine Stewart. Like to speak to the motion, Councillor Clout? No comment? In which case I'll put the motion. All those in favour, please say aye. Aye. Against? Abstentions? Carried. Are there any declarations of conflicts of interest? Moving along, we'll move to the business for today. The first item of business is a presentation from the LGFA. We have John Avery, Director of the LGFA, and Andrew Michael, Senior Manager, Credit and External Relationships. Chief Executive, Paul, want to do an introduction, or are we happy to move straight to the presentation? Gentlemen, we're in your hands.
Firstly, thank you very much for the opportunity to come and speak to you today. Tauranga was one of the inaugural councils to join LGFA, and we're very grateful that the support that you've provided over the years. So as mentioned, my role was to oversee council's sort of finances on behalf of LGFA, and John is an independent director of LGFA, and John's been associated with LGFA since inception as well. Welcome your questions, comments and any feedback you have. So I'll go through the presentation reasonably quickly, and hopefully that will leave time for your comments at the end. So LGFA is your organisation. It's owned 80% by councils and 20% by the New Zealand government, and it's set up to provide financing for the local authority sector in New Zealand. Just a very brief overview. So currently LGFA has 64 council members out of the 78 councils in New Zealand. We have pretty much every council now that has debt in New Zealand. The one we don't have is Dunedin, but they've agreed in principle to join. So the support that LGFA's got from the sector is well above what was thought would be the case when the model was first put together. We started off with 25 million of paid up capital. We've been retaining the majority of profits in the business, so the amount of equity is now up to $68 million. We have strong support from the New Zealand government, so the Debt Management Office do all our interest rate swaps, and the government also provide us with $1 billion of committed standby facilities. So we've never had to draw on that, but it just means if capital markets ever get in a crisis, that support in terms of liquidity from the New Zealand government is, something that's very valuable in continuing to provide finance to the sector. Just very briefly, this is our bond issuance. That bottom left-hand table in the light sort of green just shows the amount of bonds on issue. So we now have over $9 billion of debt on issue to the sector, which is on lent to councils. Just a map of the country showing our sort of membership. There's still a few. We have nearly every council in the North Island signed up. The only ones we don't have are South Waikato and Napier's sitting on an awful lot of cash at the moment and has no debt. Down south there's a few of the smaller councils that don't have any sort of debt, but nor do they necessarily have high growth rates, so that's the historical reason sort of behind that. The key things I sort of wanted to touch on were the credit ratings of the sector and the change in the Standard & Poor's sort of methodology. And the second thing I sort of wanted to cover off was the LGFA covenants. Currently in New Zealand there's 28 councils that have credit ratings. Lots of the smaller ones do not have credit ratings, and that's because they don't have enough debt to justify the cost of getting a credit rating. But you can see there the credit ratings of the sector range between AA and A+. And one of the important things to note is that when the structure of LGFA was put together, the covenant levels were conceived so that the lowest rated council would have a credit rating of A+. And that's because the cross-guarantee structure that's in place just means that by having a very high credit rating of A+, just minimises the chances of anything sort of going wrong with a particular council. These are the changes to credit ratings over the past sort of 3 years. As you can see, most of the changes have been upgrades, which is extremely positive against a background where sector debt has risen. Just lately there's been a change to S&P's methodology, but also Fitch's, and as a result of the change in Fitch's methodology, both Queenstown and Hamilton, which are both growth councils, have been placed on negative outlook or negative watch. So they haven't been downgraded yet, but there's a possibility just because of rising debt levels that they may well be downgraded. That said, we're never, at LGFA, we're never particularly concerned if councils are downgraded, because often it just reflects timing in their capital expenditure. So councils in the past like Taupo and Western Bay have had lower credit ratings as they've gone through a high capital expenditure program in their waters, and as they've got through that and been able to reduce the amount of debt, they've got upgraded. So to some extent I think it always needs to be remembered that credit ratings can be cyclical and just reflect the timing of a council's capital expenditure program. Why credit ratings are useful to LGFA is around sort of 30 to 40% of our bonds are held by offshore investors. So investors in places like, Japan and Europe aren't familiar with the individual council names. So if we asked them who Taupo or Rotorua was, they wouldn't have any idea about who they were or what the credit quality of that council was. So by having a credit rating, it gives overseas investors an insight into the creditworthiness of our lending book. So you can see there we've broken it down in percentages. So we can say, look, of our 9 billion of lending, 53% is to entities rated AA, and only 11% is to unrated entities. So when they look at that, they're going to say that the credit quality of our book is extremely sort of good. It's important to remember the highest rated bank in New Zealand is only sort of AA minus. So that is one reason why LGFA, being rated AA plus, can get access to funds a lot cheaper than the banks can. So that's the main driver why we have such a competitive funding advantage versus the banks. And we have an extremely high market share now of council lending just because we are the cheapest source of funding. This is probably a little bit sort of hard to read, but this is the Standard & Poor's framework. So they group countries into on a scale of 1 through to 6. So 1 being the strongest sort of frameworks and 6 being the weakest. So New Zealand is only one of 6 countries that is rated a 1. So you look at, say, like France is rated a 3, Italy's rated a 4. So the institutional frameworks, that's, covers things like, the power to rate, is regarded by Standard & Poor's as being the best in the world. And that's, one of the reasons, because the institutional framework is so good, why we've never had a default in the council sector in New Zealand. And because the framework is good, that drives the credit rating sort of higher than what you see in other countries. So again, New Zealand councils are rated amongst the best in the world. That said, the debt levels of New Zealand councils on a global basis are amongst the highest in the world, in part because they have quite large responsibilities for infrastructure funding. If you go to Australia, for example, a lot of infrastructure is done by the state government as opposed to the councils, which more do things like libraries and sort of parks. So to put it in some sort of perspective, this is the new proposed sort of methodology under S&P. So looking at just the weighting they assign to the debt. If you have debt levels, and these are gross debt levels rather than net debt levels, above 180%, you score the lowest rating, so you get assigned a 5 on a scale of 1 to 5. To get a 1, you'd need debt levels of less than 30%, so net debt to revenue of less than 30%. So again, there wouldn't be too many councils that have certainly there'd be probably no growth councils that have net debt revenue of less than sort of 30%. So a lot of your high growth councils like, Tauranga, Hamilton, Auckland, Queenstown, Christchurch, when you look at their long-term plans, are all forecasting net debt to revenue above sort of 180%. So that's not necessarily bad, because you're financing a lot of growth infrastructure and you'll have a higher rating base to service that sort of debt in the future. But it does mean on the S&P methodology, which is a global thing, not designed specifically for New Zealand, you will score the lowest rating. This is the change in the methodology, just to give you a brief background of what S&P sort of have done. Previously there were 7 different categories which you're allocated a score. Under the new methodology, there's only sort of going to be 5. So the weighting to debt is increasing from 10% to 20%, and the weighting to budgetary performance, which is your surplus or deficit after taking into account sort of capital expenditure, also increases. So both those weightings will serve to act against New Zealand sort of councils, because, as I mentioned, New Zealand councils tend on a global basis to have higher debt levels, and also because councils in New Zealand are doing a lot of investment in capital expenditure. Again, they're generally going to have a deficit after taking a cash flow deficit after taking into account capital expenditure. So when I've modelled the 23 councils that have an S&P rating, not one council's quantitative score improves under the new methodology. So at the margin, it's a slight sort of negative for New Zealand councils. This is the outcomes for Tauranga over sort of recent years when you look at the quantitative sort of model. So I won't spend too much time on it, but the score for Tauranga has been improving slightly over recent years, and that has, you know, in part been driven the upgrade to Tauranga's rating from A+ to AA-. Under the new methodology, you can see that the weighting, you lose the benefit of what you were getting for budget flexibility, which was coming out at strong, which had a really good mark. New Zealand councils have very low contingent liabilities, so that's being removed. So contingent liabilities is generally support for CCTOs, so probably only Christchurch and Dunedin would be rated higher on that because they're providing a lot of support. So you're losing two categories where Tauranga scored well and replacing them with two categories that didn't score so well. That said, I think Tauranga's economy will be upgraded because S&P are using more a national approach rather than a regional approach. And there may also be some quantitative, under the new framework, there's more quantitative adjustments the analysts can apply, which are generally, for New Zealand councils, I think going to be favourable. So my expectation is that, you know, for the next few years, Tauranga's credit rating is likely to be unchanged under the new methodology. Just a bit about council sort of debt levels and the covenants. You can see there how much gross debt of the council sector has increased over the past sort of 10 years. So it's almost gone up by 4 times. And that's the reason LGFA was performed. So people knew there was going to be a big investment in capital expenditure in the sector sort of 10 years ago. So creating LGFA was a way of creating certainty to the sector to be able to sort of finance that. And the good thing is, you know, when I mentioned offshore investors, but you know, there is a lot of people offshore that really like the story behind the sector. So until LGFA came along, they just didn't have a way to lend to the sector. So by aggregating the debt, it gives them a way they can, you know, provide, lending to the sector, which is an extremely sort of good credit risk. Changes in net debt levels. So we've done a bit of analysis to show what's going down if you break the sector down into different sector groups. So these are using the L, G and Z definitions. So for example, 26 councils are placed in the rural council group. Tauranga goes under the metro councils, excluding Auckland. Interesting, what you can see is, even though I mentioned we've had an increase in overall sector debt, when you break it down into the different sector groups, you get a different story. So you can see with your rural councils and provincial councils, actually net, this is looking at net debt rather than gross debt, but net debt actually over the last sort of 5 years has been going down, and certainly on a net debt to per head of population, it's been going down as well. So the growth in sector debt has really been driven by, in particular, Auckland, and Auckland represents, you know, half the sector debt at the moment. And to some extent, Christchurch, following the earthquakes, has also, their debt's gone from about 300 million to about 1.8 billion dollars. That said, when you look at the 2018 long-term plans, you're getting a very different picture, and debt across councils is tending to rise right across the sector. And that's because for the rural councils that are probably underinvested in water, given there is likely to be greater regulation, they are now being forced or incentivised to have to put more investment into the waters, into their capital expenditure programs. So there's a lot more sort of catch up in that sort of area following probably a long period of underinvestment in core infrastructure. The metro councils and Auckland councils, again, very different sort of issues than the rural councils, but again, a lot of the capital expenditure is being driven by growth rates, and again, so the investment in infrastructure is entirely appropriate given that sort of background. So you might ask, why has Auckland got, average debt per person of $8,000 and the average metro's only $2,400? Well, Auckland have done a lot of borrowing over recent years and now have a lot less headroom under their covenants than other metro councils do. So when you look at their debt levels projected over the next 10 years, their debt is growing at a lot lower percentage rates. Even though it's growing, it is growing a lot less a percentage rate than your Hamiltons, Queenstowns, Taurangas, that have a lot more headroom under their covenants available to them. So that gap, between Auckland and probably the other metro councils will close somewhat over coming years, albeit I expect Auckland will remain, well above the other average for metros. And also these are only sort of an average, so you have, under metros, you have areas like Upper Hutt and Pororoa, which are metro councils that have a lot lower debt. LGFA has three key financial covenants. The one councils probably are finding the most challenging is the net debt to revenue covenant. This is the one councils have the least headroom under. The two others are net interest to total revenue and net interest to rates. The ability to meet those two interest rate covenants is quite comfortable at the moment, and that just reflects that interest rates have come down a lot, so your ability to service your debt, not surprisingly, is very easy to do given interest rates are at sort of historical lows. However, over the cycle, that could change. So not that we're predicting it, but if interest rates went from 2 to 3%, where they are at the moment, back to say 7 or 8%, your ability to service your debt would be more challenging. So these are the range of outcomes for the 2018, the year ended June 2018. The net debt to revenue for the rated councils, which is the top box, ranged from minus 160%. So that was New Plymouth, because they have more financial assets than debt, so it gives them a negative number. And the highest was Auckland at 190%. So they still do have some headroom, but they have the highest net debt to revenue ratio of any council. Not surprisingly, the unrated councils, which tend to be more your rural councils and smaller provincial councils, have lower net debt to revenue ratios. So the highest there was Waitomo at 127%. Quite interestingly, Kaipara back in 2012 got to 220%. So at that point, they were outside the LGFA covenants and weren't allowed to join LGFA. But they're now down to around sort of 90%. So it's interesting how it can turn around so quickly once you sort of complete a lot of your capex and you use your cash flow to reduce debt. This is Tauranga's historical compliance and also the forward-looking compliance based on LGFA's analysis of Tauranga's long-term plan. Quite interestingly, Tauranga's net debt to revenue got to 250% back in 2011, which was, the year before LGFA was put together. So again, it sort of shows that, sometimes things are a bit cyclical. So in recent times, Tauranga has, for various reasons, reduced its net debt to revenue ratio. But now, given there's a very strong CapEx program that is sort of forecast, net debt to revenue is forecast to get up to sort of 240%. And I know you've had your annual plan sort of deliberations, so the cost of some of that CapEx has changed. But against that, there's still a lot going on in the sector, like the Productivity Commission, the Three Waters reviews, Treasury looking at different sort of funding vehicles for the sector. So, it'll be interesting to see what develops over the next sort of few years, but it may see, some of these numbers change depending on the different options that are available to the council sector. These are just the average outcomes for council. So again, the rated ones at the top, the unrated ones at the bottom. Interesting, just looking at those rated ones, that the average net debt to revenue ratio, even though sector debt has gone up, has been sort of declining. And that's, in part due to that revenue has been growing just as strongly as debt has in the sector. And when we look at the 10-year long-term plans, for the average council, while debt is forecast to go up by something like 50%, so does revenue go up by about the same amount. So interesting, when we look at forward compliance, the average outcomes in 2028 aren't a lot different than where we are today. That said, a lot can happen in 10 years. So. And just to show you the difference in sector debt over the last three sort of long-term plans. So the interesting thing was the 2012 and 2015 LTPs were quite similar in seeing the gross debt of the sector peak at around 20 billion. The 2028 LTPs, as I mentioned, there's been a lot more CapEx put in, so sector debt is now forecast to be higher than where it was in the 2015 LTPs. And that is, not Auckland driving it. Auckland's always had a big CapEx program, for the last three LTPs. So this is now other councils, so your Hamiltons, Taurangas, Queenstowns, Wellingtons, and all the rural councils, as I mentioned. So it's a lot more across the whole sector that is driving that forecast increase in debt. So I'll finish there and happy to take any comments or questions.
Copy being uploaded to Stellar, as I understand it.
Thank you. When we look at the covenants in particular, the net debt to operational revenue, in growth councils where we see a lot of horizontal infrastructure demands, and particularly we've got a growing population, net immigration is high. We, moving forward, we've got to put in place that infrastructure. And if you ring fence those particular projects, we're told the operational revenue is around 10%, compared to the capital cost. So when you're looking at ring fencing those projects, you get a ratio of it's 10 times the operational revenue, and yet we've got to meet only 2.5 times operational revenue when you look at that ratio. So how do growth councils manage that to keep within that ratio, given that we've got a high demand for horizontal infrastructure with relatively a whole lot lower operational revenue? And then some of that interest is also attributed to development contributions, which is capital revenue. Is a whole lot that makes it very difficult for us.
It does. Look, it's a very interesting question and observation, and I could probably speak for a couple of hours on that topic, because there's a lot of things in that. It is, the net debt to revenue covenant is sort of challenging at the moment for growth councils. So when you don't have a lot of headroom left, that can end up putting a lot of pressure on rates. The issue is that if we increase the covenant to provide sort of more headroom, then that would lower the credit quality of the sector, and it would sort of push up borrowing costs for sort of all councils in New Zealand. So it is sort of quite a fine sort of balancing act. It's also things like development contributions, I think, probably aren't treated fairly by the rating agencies, so they give you no credit for that. We can argue about whether that's fair or not, but you know, New Zealand's only a small part of the world, and even though we can try and lobby to get things sort of changed, it's very hard to get changes in global methodology when decisions are made by, you know, analysts in the Northern Hemisphere. It's just the reality of what it is. I think, you know, just a general observation is, you know, unfortunately we've had a period maybe of, you know, 40 years of underinvestment in infrastructure in the local authority sector, and it's just the current ratepayers are probably paying a disproportionate amount towards, you know, having to construct, you know, the infrastructure. But it is what it is, you know, it's like, you know, you can't go back and sort of, you know, tax historical ratepayers, you know, for their under contribution towards growth. Lastly, I'd say, you know, again, S&P methodology is based on a council defaulting over the next 2 years. So they do not look at what your ratepayer base is going to be in sort of 10 years' time. Again, we could say that's not fair because you're not giving any recognition for the fact that your rating base will be a whole lot higher. That said, you know, areas like Queenstown 2008, where you're sort of forecasting all this growth, and suddenly it stops. So this is what the rating agencies are going to say. So relying on something that may or may not happen is, you know, sort of has its sort of challenges. So there's a whole lot of things in there.
Risk of immigration policy is suddenly changing due to central government and the growth stopping.
And yeah, that's a really good point. So probably, I think there needs to be more central planning or coordination of a lot of policy so that it doesn't just fall back onto growth councils to suddenly have to pick up the tab. So, and I think there is some sort of recognition of that, and maybe creating a infrastructure sort of body to look at, you know, the New Zealand infrastructure requirements on a 30-year sort of time horizon. So that's more the ways that countries like Singapore have always sort of look at things. You get a lot more forward planning. Again, that doesn't necessarily create a fair output for some of the high growth councils from where they are right at the moment. But again, let's see what the Productivity Commission come back with. Yeah.
Councillor Terry Malloy.
Yeah, through the chair, thank you very much for that presentation. Just historically, Napier, no debt. How the hell do they do that? Because you know, it wasn't that long ago the city was wiped out. Okay. So, yeah, have you? Is there any simple answers there?
Yep, there's a bit of unfairness. Napier is a city council. Hastings is the district council, so all of Napier's residents get to drive on Hastings Road for free. So, yeah, and bridges, and so again, if you actually had one council for the whole district, you'd probably get sort of fairer outcomes. Yeah, but again, it's just is what it is.
Supplementary then. Standard & Poor's, how are they regarded worldwide? Are they the benchmark? Pretty much.
There's 3 major credit rating agencies in the world. So there's Standard & Poor's, Moody's, and Fitch. Standard & Poor's I would say they have had the strongest presence in Australasia historically. So in this part of the world, they're probably regarding as the benchmark. I think if you spoke to investors in Europe or the US, Moody's and to a lesser extent Fitch would also be regarded just as well. What a lot of our offshore investors want is 2 credit ratings, so they want a second opinion. They don't just want to rely on one. So that's why LGFA has a credit rating from both Standard & Poor's and Fitch, which is both AA+. And hopefully, if the New Zealand government is now on positive watch from Standard & Poor's, so if they go to AAA, LGFA will also go to AAA, which again is going to create hopefully more appetite from offshore investors for LGFA bonds.
Councillor Larry Baldock.
Thank you, Chair. Thank you also for the presentation. Just 2 questions, just following on from Councillor Kirak. The issue about our DC income not being included, that would make a big difference to our ratio just there without having to do the whole covenant thing. But so you're saying you can't do that? Why can't you do it even though the international agencies wouldn't? What would be the impact of that?
So when the LGFA covenants were put together, there was some definition around what comprises revenue. So development contributions are excluded from revenue. The reason is because, net debt to revenue, debt has to be supported by a constant sort of revenue number. And it was rightly or wrongly, when it was sort of all put together, it was felt that the development contributions were too volatile. Maybe arguments could be made in some places that's not the case. But again, you look at sort of Queenstown, and if they had borrowed against their development contributions and suddenly they stopped, now I know that's turned around, but if they'd stopped for a significant period of time, if you'd borrowed against that, then there's be some question marks about whether you could sustain that level of debt that you'd sort of borrowed against development contributions. So again, just the covenants were so LGFA didn't exist, so the covenants were put together by the working group of councils combined with PwC and Cameron and Partners. So it was put together really by the sector to come up with a framework that would support long-term financial sustainability. Because, there is the issue of the guarantors. So, councils are guaranteeing LGFA. So the last thing we want is councils to get into financial difficulty.
The view of DCs has changed over the years, even from central government, where it was viewed as sort of profit-making rather than just recovery of, real costs. So, and it is a shame because that we it would be like a 6 or 7% rate rise equivalent if we could include our DC income really. But my second question is about the chart you had up where we score weak in budgetary performance. I just wondered if you would comment about why that is. What is it about? Is it just that we're not completing our CapEx program very consistently, or what is it?
Again, the word's a little bit sort of misleading, but budgetary flexibility, which is the category that's disappearing, had to do with the council's ability to create more revenue. And because councils can increase rates, New Zealand councils have been deemed to have a lot of budgetary flexibility, as opposed to maybe other jurisdictions where, you're just relying on, government grants and you can't change whatever the outcome is. So unfortunately that's disappearing. Budgetary performance is your, essentially your cash flow deficit after capital expenditure. And so if you're a growth council, you're almost certain to have a deficit there. So that's not to say you've got an operating deficit, because most growth councils, including Tauranga, actually have a budgetary surplus. But it looks at your deficit after taking into account capital expenditure. So again, it just reflects that if you're a growth council, like your Aucklands, Hamiltons, Taurangas, Queenstowns, Christchurch, you're going to not score well on that category. That doesn't mean, I mean, the last thing, not that we give opinions on what a council should or shouldn't do, but really the most important thing is to do the CapEx because it's required, not to try and do something to get a different S&P sort of outcome. So I think my observation would be just accept it is what it is, get on and do the right thing, and eventually the cyclical thing when you've done the CapEx program will turn around and you'll get a stronger outcome once the bulk of the capital expenditure program has been completed.
Councillor Kelvin Clout.
Thank you very much, Andrew and John, for coming. We're told that if we can tap into special purpose vehicles, that the debt will be off our books, which is fine. Can you just clarify whether or not the agencies would still regard that as being council debt? What circumstances would they or would they not recognise it as council debt?
Very good question. It has been that issue has been something that's been worked on by sort of Treasury. We would take a similar view to the rating agencies that if the council is going to provide support, so it's got to be sort of remote. So as soon as you lend support or a guarantee to something, then essentially you're taking responsibility for that debt. So, the big projects that's been talked about in Auckland is the Central Interceptor, which is a water care project to do wastewater and stormwater or increase capacity throughout Auckland so that the beaches don't get flooded every time it sort of rains or polluted every time it rains. So that's a $1.2 billion project, and that would be serviced by a special levy, not a rate, but it looks like a targeted rate for all intensive purposes. So all ratepayers would sort of pay that. What would happen is on day one, the way it's proposed is the assets would vest to the council, so the council would just manage those assets as they would normally. The security that the lenders would have, and it would probably be something like a 30-year loan, is the special levy. So you have a 30-year levy, which is not as strong as rates, but pretty strong and legislated sort of for. So it's a pretty good security really. And so again, that's what your security is. So you can't come back to the council and get a top up or whatever. So they're the sort of things. The other one that's been done, the only one to be done to date, is a subdivision in Auckland called Milldale, and so that's like a $50 million project to put in infrastructure to support sort of housing development. And again, there's a special levy that goes with the property, and that stays with the property unless you sort of pay it off until that levy is paid off over that sort of 30-year period. So there are some options that potentially will be available to high growth councils to complete infrastructure. And if they're in your LTP, which the Central Interceptor is in Auckland's LTP, so if that gets done by a SPV, suddenly frees up another $1.2 billion of capital expenditure that the council can then do without increasing sort of rates. So,
Councillor Max Mason.
Andrew, do the rating agencies take into account the size of the risk reserve? Because I guess you could have a big risk reserve and high debt, which would change the ratio. But if you convert it, and you could have a low risk reserve and a high debt, and that would influence potentially your rating. So do they take into account that?
So can you just explain what you mean by a risk reserve?
So we've got a risk management fund, for example. We could say put $100 million into that if we had it, and that would reduce our debt by that amount.
The rating agencies only look at gross debt, so you don't get a lot of you don't get any benefit for having sort of risk reserves as you've explained them. So nor do you have sort of benefit if you have term deposits sort of sitting around. LGFA look at net debt, so the treatment is more generous than the rating agency. So under the LGFA sort of methodology for calculating your net debt to revenue, you would get benefit for that. So just on that, so S&P, I talked about the 180% sort of is the high threshold. So under the new methodologies, there's been talk that you can go up to 500% net debt to, gross debt to sort of revenue versus 270% previously. So that 270% is a number you often see in the paper in relation to Auckland. So that doesn't mean that Auckland can borrow 270% under LGFA's methodology. They can't. They can only borrow the sort of 250%. When I've talked to the analysts at S&P about that 500% number, they have said that in New Zealand and Australia, they don't see any change to the previously 270%. So 270% is a trigger for a downgrade of a council's rating if they go over that. So Auckland already get the lowest score because they're over 180% net debt to revenue. If they went over 270%, they'd get a full downgrade to their sort of credit rating because it's deemed to be debt's already high and now it's extreme. So, yeah, a few things in there.
Councillor Rikurek.
Just following on to that, earlier you mentioned Australia aren't exposed to the level of infrastructure, and I'm thinking about horizontal infrastructure that New Zealand councils are, because it's done by other entities, and councils are more or less limited to things like social infrastructure, etc., etc. So why isn't there a differentiation between the covenants between New Zealand and Australia to recognise that difference? Because it's significant. Why treat us all the same when it's quite different?
Councils aren't treated all the same. So S&P are trying to come up with a global sort of framework. So, and the problem is that you're across different jurisdictions with different rules and things. So that is recognised in the framework that they have for the countries. So this slide here. So there's some recognition there that New Zealand Council's framework is good, as is Australia's, but in other countries the framework isn't as good because their sources of funding might not be so reliable. So I guess they look at all the individual factors for a council under that sort of framework there, but the framework is already accounting for a lot of the score that goes into the overall sort of outcome. So that is, the good factor there for New Zealand is that, we have such a strong framework. I would say also S&P also say our council's disclosure in terms of annual reports and long-term plans are amongst the best in the world. So a lot of the things that we're doing are, what the rating agencies would say is world's best practice. So they think, the disclosures that we have here are just unbelievable compared to, them struggling to get information from councils in sort of other countries. So I think, we're doing, despite the challenges, we're doing an awful lot really, really well. And that's why, again, the global investors that invest in LGFA's bonds really like the sector and see it as a really good place to invest their money.
Mr. Chair, another question around the source of funds. Does the LGFA ever consider actually sourcing it directly from New Zealand investors, like even mums and dads, or because what percentage is sourced globally?
Sorry, apologies. LGFA's bonds are listed on the stock exchange. The retail investors, that is direct holders by retail investors or held by nominees of some of the NZX brokers, are in the yellow line, so they make up about 3 to 4% of LGFA's investors. So the KiwiSaver funds are the grey line, so that's the domestic institutional investors like your ANZs and AMPs, Fisher funds, etc. So there is retail participation through that. The problem with attracting more retail investors is that the yields on LGFA bonds are below, quite well below retail term deposits. So for example, if you took a 6-month LGFA investment, probably be around 1.7, you probably get 3.25 in the bank. So retail being retail just chase yields, unfortunately. So yeah, so you want the cheap, yeah. Yeah, so banks offer a lot higher than what LGFA is. So you want the cheapest source of financing, and you can get cheaper financing from offshore investors and domestic institutional investors than you can from New Zealand retail investors. So if we wanted to attract more retail investors, we'd have to pay more, and then your cost of funds would be more. But so we are the largest listed issuer of debt on the New Zealand Stock Exchange. So our bonds are all listed, and retail investors can participate by going through a NZX broker if they want.
Councillor Larry Baldock.
Thank you, Mr. Chair. Andrew, you gave a little glimmer of hope earlier that the government might get to AAA, which we might benefit from, but the recent announcement by the Minister of Finance, do you think that's going to torpedo that?
It doesn't help, but it's early days yet as to what the short-term implications of that announcement sort of are. So it may well give them more flexibility over the longer term, but not change any short-term outcomes. So we'll see a little bit more in the budget when it's sort of released. But yeah, the upgrade that S&P sort of signalled, and so it's not a definite, it's just possible, was contingent on meeting certain sort of fiscal targets. So you'd have to see the fiscal situation continue to track reasonably favourably as it has done over the last sort of few years. So it still may be another year or two away before we get S&P making a final decision on that. So a lot can happen. For the New Zealand government also, a lot is going to depend on, in terms of the performance of the economy, on what happens globally, which is something outside their control. So if we get a big global sell down, fiscal stimulus is a reasonably common tool that is used throughout the world to provide short-term economic growth.
Councillor Max Mason.
Yep, just following that theme, Andrew, what are the sort of main conditions that would drive interest rates up, which would be pretty important for us?
The single biggest factor is what is happening sort of globally. So the world is quite a small place in terms of capital sort of flows these days. So when we look at sort of Europe, their short-term interest rates are negative at the moment. Look at Japan, 10-year rates are sort of close to zero. I think in Germany the 10-year rate is slightly negative on German sort of bonds. So the one country that's been the exception has been the US, which has raised interest rates over the last few years as their economy has strengthened. But again, now the Federal Reserve is sort of on hold. So I think there's a lot of challenges sort of globally. So the likelihood is that interest rates are going to remain low for some period of time. So that's good news for New Zealand councils that are borrowing, because your borrowing costs are almost certain to be lower than what you're forecast in your LTP. However, that is being sort of offset, and probably more than offset, by rising sort of construction costs. So what you save on one hand, is being offset on the other hand. So again, that's just a constant theme we are seeing throughout the sector.
Any further questions? One from the chair, if I may. In the past, I've seen connection drawn between the rating from an agency, AA, whatever, and the quality of management, a direct connection. Have you any comment on that? Because my understanding is that management's reflected in one part of the rating, but have you any comment on that?
Yeah, it is sort of reflected as a subjective assessment under financial. Whoops. Go back. So it is on that sort of score reflected under sort of financial management. So it is part of the assessment that goes into that. I would generally say the larger New Zealand councils will score well under that sector. I think on a global basis, the quality of the management by New Zealand councils is extremely good, and I think it's improved. The depth in executive management in New Zealand councils has improved a lot. Well, has improved over the last sort of 10, 20 years. So again, I think that's sort of really good for the sector. So I think, yes, it is part of the scoring, and New Zealand councils will score well under that sector. And you can see your financial management for Tauranga is scored as strong, and that's entirely appropriate.
Thank you. Last gentleman. Thank you very much for an interesting presentation and some interesting questions from my colleagues. Appreciate it. The next item on the agenda will be a presentation re Boplas. So we'll just allow for a quick shuffle of seats, and we have Stephen Boyle, who's welcome back, Stephen. Not your first time in that chair. As ever, the floor is yours.
Thank you, Mr. Chair. And thank you for the opportunity to update Council on Boplas and the value being delivered to Tauranga City Council and to our other 8 shareholding councils as well. I just wanted to begin with apologies for being unavailable when I've previously been invited to attend. It would be ideal to send somebody in my place, but Boplas is a very small organisation. Unfortunately, there's no mini me to send, so apologies for not attending last time I was invited. And it's probably a good opportunity to just let the committee know a little bit more about Boplas's structure, based upon that comment about us being a very small organisation. I'm the only full-time employee within Boplas, and I'm primarily responsible for engaging with your councils to identify opportunities for projects, and then running those projects across our councils. And I'm also responsible for running our organisation and our requirements under the Local Government Act and the Companies Act, and reporting back to councils as I am today. We have an IT manager who provides special support to any of our IT-focused projects, but he's actually only working for Boplas 2 days a week now, and for the last couple of years he's been seconded to other councils for the other 3 days a week, so effectively he's a part-time employee for us as well. And you'll see on our accounts that we actually have a sales of service revenue line, which reflects the revenue we generate from seconding him to the other councils. And our most important member of our team is Nikki, our administrator, who literally pulls everything together and keeps it on track from an administrative point of view. And so she's also a part-timer as well. And I just wanted to quickly share a story with you, because a couple of years ago we hosted a group of South Australian mayors and CEs that were very interested in Boplas and what we're able to achieve. And we've done that with several groups from around the world, actually, that come fairly regularly to look at the Boplas model. And we did presentations to this group, and our administrator organised the room and all the arrangements. I did a presentation on Boplas and what we'd achieved and our structure, what we're doing, and our IT manager presented on our IT projects. And then during the questions and answers afterwards, the question was, can they come back to our office and meet the rest of the team? I guess I'm sort of tooting our horn here a little bit, but I mean, we hear this quite often, that I think we punch above our weight. We're a very small organisation, but we do deliver a lot back to our councils as well. Today I want to give you a quick update on Bopless's strategic direction and then an overview of some of the key projects that we're working on at the moment, and also some of our successes as well. The Bopless 2019-22 Statement of Intent was recently reviewed by Council, and you will have noticed that there's now a greater focus on joint procurement than there has been in recent times, and also a focus on interregional collaboration. Following a strategic review of Bopless, the board has created that stronger emphasis on joint procurement, and as I say, that's reflected in our Statement of Intent. Bopless has been very successful in joint procurement, and the board want to ensure there's continued value and savings delivered to all of our councils through the proactive management of our existing accounts and existing contracts that we have, as well as identifying new opportunities as well. The board have also increased the focus on working interregionally and looking at opportunities to collaborate with local government organisations outside of the Bopless family. I mean, there's a great opportunity to collaborate within Bopless, but there's other LASs around the country that we can collaborate with. And for some councils, there will often be partners that may be outside of the Bopless councils that should be explored as well. We've got several projects which are currently being undertaken in conjunction with Manawatu LAS, Waikato LAS and Hawke's Bay LAS. With our insurance, we're going to the market later this year for broker services, and that's going to be led by Bopless, but it will encompass all those other LASs as well, which obviously gives us a lot more leverage within the marketplace. Recently, we looked at debt management services and whether there was an opportunity to establish that as a shared service across the councils. We identified that Manawatu LAS already have that in place as a shared service, and we've looked to actually join their model as opposed to replicating that. Their model's been very successful. They've got 22 councils now which are operating through that shared service that they have, and there's the opportunity for the Bopless councils to be able to participate in that as well. Our solid waste projects are being done in conjunction with Waikato LAS, which makes perfect sense given the current relationship between Bay of Plenty and Waikato, and where the waste is moved around as well. And later this year, we're going back to market for postal and courier services, and once again, we're looking at doing that across the greater LAS region in the upper North Island to get that leverage. Last time we went to tender, New Zealand Post weren't that interested in playing ball until we actually joined up with other LASs and got a lot more leverage, and we expect to do the same thing with that tender later this year as well. Looking at some of the other projects that are underway, our insurance program continues to deliver substantial savings, and given that this committee deals in finance and risk, I thought I'd probably just expand a little bit more around what's happening in the insurance markets for our councils. Underground infrastructure insurance is becoming much more challenging for New Zealand councils to place due to the hardening international insurance market. The change in the market has been caused by an extremely high number of weather disasters, and 2017 was the costliest year on record, with a cost of $344 billion, which is a significant hit on insurers. 220 billion of that was from Hurricanes Harvey, Irma and Maria, and of course Christchurch and Kaikoura claims have also impacted on the New Zealand insurance market and the availability of international insurers. Because of our decision several years ago to establish a collective insurance program for placement of councils' infrastructure insurance through the London markets, Bopless councils were not only able to renew their policies last year, but were able to achieve this with very competitive rates. And this compares with councils that are outside of the program who face rates of increases of up to 300%, and in the worst cases struggle to even place their insurance. Councils trying to move to the London markets now will be considered distressed buyers, and will actually have a lot of challenges in trying to achieve that. And I think this is a good reflection on the board's forethought and strategic planning to look at our insurance several years ago and actually lock this in place, which has been a real benefit to all the councils. The Bopless insurance program, together with the other LASs that partner with Bopless in this program, are held in high regards by the Lloyd's underwriters, as we've established strong relationships in those markets, and our councils have been able to demonstrate a good understanding of their risk and demonstrate a good management of their risk as well. However, there is an expectation from the underwriters that the quality of the valuations will all be to the same standard, and that will be able to provide improved confidence in the valuation data and the quality of the data. So BOPLAS is undertaking a project to align the valuation data across the entire region with best practice to ensure comfort is provided to those underwriters when they're looking at our valuations and setting our insurance. And without that, the underwriters actually have to make a lot of assumptions, and if they're not confident on the data that's been provided around valuations, and if they make assumptions, then that's reflected in an increase in rates because they feel they don't have enough data to work with. So that's a collective project that's been taken across all of the BOPLAS councils to make sure that we're following best practice in our valuations. With aerial photography, last year we ran a tender for aerial photography, and once again substantial savings were returned to the councils through working collectively. But we were able to shave another $100,000 or just over $100,000 off the final tender price by taking a unique approach which actually hadn't been done in the New Zealand market before to the capture of the aerial photography and the capture of the LiDAR data, which is the 3D imagery as well. So that $100,000, which was budgeted by councils, obviously went back as a direct saving to them on top of the savings they were getting through that collective tender. And a further win with aerial photography has been through our application to the Provincial Growth Fund for co-funding to help us offset the costs of the LiDAR capture, which is the 3D imagery capture across the region. And I'm pleased to advise that we've been successful in our Provincial Growth Fund application, and the Provincial Growth Fund is going to make a substantial contribution towards the region's LiDAR capture program. We're about to work with LINZ to release Land Information New Zealand to release a tender for this work, so unfortunately I can't share the actual value of the Provincial Growth Fund because it's kept confidential at the moment. And the size of the tender is kept confidential at the moment as well. But I can let the committee know that we're talking hundreds of thousands here. We're not talking tens of thousands. It's a very substantial contribution towards the program. I just want to quickly touch on our advisory groups. We have groups of individuals from the councils that are normally the managers in that particular area of council business that run our advisory groups, and we work closely with them on projects, whether it be GIS group or whether it be an IT managers group or an insurance group. The one group I want to talk about is our health and safety advisory group, because they've been a very productive group with a number of collective projects completed and a number of new projects underway as well. But many of the gains that have come from this group have been through sharing of information, sharing of policies, sharing of procedures, and probably a glowing example of removing the duplication of effort that's so common across councils, where you've got 9 councils that are doing it once and they're doing it together. It's hard to actually measure that as a financial return to the councils, but it's obviously a real saving in resource cost, and it also means that often you're getting the best practice coming through by 9 councils working together to develop things as opposed to developing them in isolation. They've also completed a number of procurement projects. The more recent ones have been collaboration in the selection of health and safety management software across the councils, which was Volt that was appointed as a supplier in that area. That was run through BOPLAS, but the Waikato LAS councils all piggybacked onto that and were able to get the same rates as that was negotiated through the BOPLAS Health and Safety Group. We've also appointed a single occupational health services provider across the councils. That's provided for a consistency of service across the councils and obviously better pricing, having the one provider being shared across the region as well. A project that's of real significance that's being looked at by BOPLAS at the moment is looking at CapEx projects around roading and civil construction. As all councils are struggling to get contractors' attention in this area, with a number of councils commenting on low responses to their tenders, and often tenders coming in at a much higher rate than what they had budgeted. So we're looking for whether there's an opportunity for the councils to begin to align some of this work across the region, as opposed to running all these tenders in isolation. The opportunity to bundle projects was explored, but it wasn't taken any further because it felt that could just play into the hands of the larger contractors and start to shut some of the smaller contractors out. So we've looked at all the council's LTPs, we've looked at the size of the projects, we've looked at the type of the projects, We've looked at the timing of the project as well, and the intention is to look at collectively marketing those opportunities to the contractors, as opposed to, at the moment, 2 tenders may go out to 2 regions at exactly the same time. In some cases, contractors may have to choose between them. So starting to get some real alignment across the region that will work better as far as getting responses to tenders are concerned. Finally, I just want to touch on the collaboration portal. I have mentioned this to this group before, but I'm conscious of the fact that it's a hard concept probably to grasp without doing a demonstration. So next time in front of council, I'd like to do a quick demonstration of the collaboration portal. But the collaboration portal is an area where councils can put the projects in there that they're doing, projects that they're thinking of doing, or projects they may have already done, and other councils around New Zealand can look in there and say, we're thinking of doing that project, can we partner up, or can we get some information off you from that particular project? So it's a great opportunity to be sharing across the whole of local government in New Zealand. We've had really strong interest in the collaboration portal, to the point that we've had to build a Mark II now, because the first model really couldn't cope, and we're just in the project process of relaunching that across the councils. It also has a chat area in there, so people from certain areas can chat with their peers and other councils to get information. It has document repositories so that people can share policies and procedures and job descriptions and so forth as well. So it's a great initiative. I won't say it only benefits the Boplas family, because that was the intention of it originally, but there's been so much interest from outside of local government. I think it's a real benefit to local government within New Zealand. From a financial perspective, we're operating within budget, and we expect to finish the year very, very close to budget as well. Happy to take questions.
Thank you. Questions? I have Councillor Catherine Stewart.
Thank you, Stephen, through the chair. My ears pricked up when you spoke about underground infrastructure insurance. Is it possible to get insurance before projects start for the unknown and the unexpected when doing a project, or is that more reflective of if there's like an earthquake or major break in existing infrastructure? Can you just clarify that, please?
Yes, insurance is available for projects at any stage, but that would be outside of our standard infrastructure program, which insures current council assets, but insurance is available, yes.
Right. No, that's good. Thank you.
Councillor Larry Baldock.
Stephen, thanks for that. Thank you, Mr. Chair. What would be the budgetary implications for you if your staff if your part-timer was increased to full-time or additional staff members were added? I heard your comments at the beginning, but you didn't really make any concrete appeal in that regard. But obviously, as the work expands, there are certain things that have to be looked at in terms of the internals of what you deliver for councils. So let's just take the first step of your part-timer becoming a full-timer. What's the budgetary implications of that?
An increase in Boplas resourcing can't be achieved without further contributions from our council to support that. The board at this stage don't want to increase the resourcing within Boplas, but they have given additional funds to support bring in contractors for specific projects, which is possibly the right approach, because we bring the right skill and set in for that particular project at that time. So.
Councillor Kelvin Clout.
Thank you, Stephen. Just going back to insurance, you mentioned that the insurers like to see us manage our risk better. We have a lot of potential, what we call resilience projects coming up in future. And so my question is, if we invest more heavily in resilience projects, is that going to be reflected in our overall insurance premium rates?
It's actually a really good question, because last year I presented to the underwriters, and I actually presented Tauranga resiliency program as an example of the proactive work that's being undertaken by our council. So it was actually really good that Tauranga's taken a lead in that space. And I can tell you from the underwriters' perspective, they they lapped that up, and they felt it was a fantastic example of councils being proactive, not waiting to see what's happening, and that would have been directly reflected back through our discount in our premiums as well. So yeah, the assumption was probably made by the underwriters that the rest of the Boplas councils were doing the same thing, and I didn't speak to that. So yeah.
Councillor Max Mason.
Thanks, Stephen. As always, very good presentation, and just wanted to quantify the value that that Boplas brings. I recall a couple of presentations ago of yours about $9 million to the council. Is that about right?
Yeah, well, that was a couple of presentations ago, so that will have increased. I actually haven't done a summary in recent times, but if I was guessing, I'd say it'd be probably close to 11 million the returns at the moment. So yeah.
Thanks. Good. Just to quantify that, that's fantastic. The other question I had was around the debt management service. You said there were in Manawatu, there were a number of councils doing it, and you were starting on that. Could you give us a little bit more detail about what that entails and the value that would bring?
Yeah, certainly. So I can talk from the Manawatu perspective because we didn't follow it through as a Boplas project, but they identified there was an opportunity to develop their own shared resource and provide that to their councils. They had somebody on staff that was currently managing the debt. He moved across to the Manawatu LAS and has become a LAS employee. Over time, they've taken on two more staff in that area as well. They only deal with local government debt, so they're actually a specialist agency in that area as opposed to some of the commercial providers that deal with a multitude of different types of debt. Their rates are much cheaper than you'll find within the commercial market. It's supposed to be a cost-neutral model that they've developed there. Their success rate has been very high, and I mentioned before. I think I mentioned that there's now 22 councils that are using that service, and they've all moved there for the same reason. That the results have been very impressive, considering the low-cost model as well. So.
So could you explain that we know with the previous presentation with LGFA, are they non-LGFA councils? And what's the difference between the the debt management and treasury management? Was it the same thing?
Oh, sorry. DMC, they call it Debt Management Central, works on recovering debt for councils. Yeah. Sorry if I didn't make that clear, right? Yeah. Probably because we've just come from LGFA. Yeah, right.
Councillor Rick Kurek.
Thank you, Stephen. In terms of the last two letters of your organisation, shared services, most of the gains have been through externally procured services or goods. My recollection when we first talked about an entity to provide savings and other benefits via shared services, a lot of the focus is around sharing services within organisations and between organisations, but that seems to be very difficult, or whatever caused that, which potentially could be resistance amongst the organisations within the entity, making up Boplas. But is that an area, I know you spoke about the portal, which potentially could open up opportunity, but when you talk about the limited resources your organisation has, and looking at who provides those resources, and it's basically the heads of the councils, do you feel as the organisation might be, what's the word, I can't use oppressed because that'll be fairly significant, but do you think there's a desire to limit your effectiveness because there might be a threat to those organisations in terms of sharing too much? And over the years, when we talked about, even joining up councils, it's like, it's just a big fear there amongst organisations and the threat of perhaps losing jobs, etc. But, it's an area that I think, councils need to work together towards achieving a lot more shared services. But, yeah, can you help me understand why we haven't made many gains in that area?
if your question's asking from a government perspective, if there's a hesitation to progress that, then I don't believe there is at all. I think from a governance perspective, the council CEs that are the directors on our board are always looking for opportunities to develop shared services. Within councils, it's much more difficult to progress shared services than it is joint procurement. Joint procurement, we aggregate the volumes of the councils, we represent them in the marketplace, we get almost instantaneous savings returned back to the councils. Shared services requires an upfront investment over a longer period of time before returns are provided to councils, and that in itself presents a lot more challenges as well. It also will often impact on the people within an organisation, and that has to be taken into account as well. So there's still a desire to progress shared services, but it's much more difficult and much slower than joint procurement. It's one of the reasons why the board have asked for BOPLAS to remain focused on joint procurement, because we can continue to deliver value in there with joint procurement while any shared services are being explored. There's also a bit of a crossover between joint procurement and shared services. We put a tender out for internal audit services, for example, and we appointed a supplier for that, that supplier works across our councils. You could argue that that's a shared service across the councils. It's one provider providing to the other councils. A shared service doesn't have to be provided by a council to the other councils as well. With health and safety, we've put an online pre-qualification portal in place, which is across all the Waikato and Bay of Plenty councils as well. So when contractors want to do work for council don't have to spend the time doing the initial work with that contractor. They go into the online portal to be qualified to work across the councils. So there are a number of smaller type shared services in place, but you're right, there is an opportunity to continue to develop the larger ones, but it will always be much slower to deliver results in that area than joint procurement. So.
Thank you, Stephen. Just follow up. What council operations or activities has BOPLAS investigated in terms of true shared services amongst the councils? Have there been any investigations, and if so, in what activities?
There's a list of projects in our half-yearly report and in our annual report. Well, actually, sorry, they're not in our half-yearly report, they're in our annual report, of projects that have been put up for consideration around shared services as well. So a number of those have been identified. Not all of them have been progressed at this stage, but I mean, I refer you to that list of projects that's there. Some projects that BOPLAS has been involved in initially, a good example of that would be the after-hours call centre. A number of councils that were interested in doing that ultimately ended up with Tauranga City Council providing that service and other councils utilising that service. It's not a BOPLAS project, it's a TCC run project, but initially to get the other councils engaged and take the project forward, then BOPLAS was involved in that particular project. So yeah.
No intention, Councillor Kirk, of foreshadowing a name change to local authority shared procurement, no? Councillor Terry Malloy.
Thank you, Steve. I guess this sits under shared services to some extent, but the collaboration portal, which seems like quite a good opportunity, can you give us any examples of how that has actually worked to date? Any collaboration examples?
Collaboration that's come out of from the portal?
Correct.
Right. I guess the role of the collaboration portal and the role of BOPLAS is to be a facilitator of collaboration, not necessarily to lead the collaboration. So the collaboration portal is about people identifying opportunities where they can partner up with other councils. Probably one of the more simpler examples would be, I mentioned before about our health and safety group. They use an area within the collaboration portal where they put up shared information that can be used across the other councils. We became aware that Waikato LAS were running a project around managing volunteers from a health and safety perspective. but they went into the collaboration portal and saw that Boplas councils had already completed that, and they were able to leverage directly off that information instead of starting their project from scratch around that. That's where a lot of the opportunities from the collaboration portal will come. It's a relatively new tool, and I'm certain that over time, people, once they look in those projects in there, will identify opportunities to collaborate and develop shared services as opposed to doing things individually. But because it's a relatively new tool, there's not an example that I can provide you at the moment. So.
Any further questions? In which case, thank you, Stephen. Interesting presentation. We'll adjourn for 15 minutes for a morning break, and we'll be back here. Let's make it 10:45. Thank you. Welcome back. I hope everyone's refreshed. Following two interesting presentations, we now move on to the business of the meeting. First item of business is effectively DC 128, Treasury Strategy. Over to you, Mohan.
Good morning, councillors. There's resolutions on there, it's the same as it was done 6 months ago, just to consistency, it's no change in them. Just to go through the report, a couple of items. Paragraph 3 shows our debt profile as at the moment. It's very pleased to say that we've got our duration above 5 years, which we've been trying to do that for a number of years, only possible since LGFA's come on board, and apart from paying through high pricing to get longer dated debt, so it's really good. So we're going forward, we just keep extending it slowly and try and maintain above 5 over the coming forward. Paragraph 4 shows a debt, detailed debt positions going to June 20. Those total number is slightly lower than the annual plan current draft. We'll adjust the total once that annual plan's approved. I think it's around 508 is the closing figure, June 20 figure at the moment. As you can see, we going down. Bank facilities are now at 70 million, which will be probably more required now that the changing methodology for S&P as well. They expect councils to carry more facilities, and as our debt's getting close to 500 million in the next sort of 12 months or so. We're planning to borrow around 103 plus, say, another 20 when the annual plan's adjusted with the annual plan, and off that about 53 at this stage forecast from the HIF fund. Moving forward, in terms of our limits, in terms of our policy limits for debt maturities are in the middle of the band, so they're in good space. Interest rates, our borrowing rates average this year is around 5, closing right at the end of April, it's around 482. We've had roughly 27 million of resets in April, which was 0.75% less than the rate sets, so less. That sort of made up about 5 basis points, 0.05 on the percentage, so it goes down slowly. By June, it should be below 480, come into June. And in May, we borrowed another $10 million, and we plan to do probably another 10, and plus about 8.9 from the HIF fund coming through. The paragraph 18 shows a table of our fixed rate debt, excluding HIF, which relating to the next table, the graph on paragraph 19. For example, June 24, we got 253 million of fixed rate debt, and that's equal to 30% of our forecasted debt. That's sort of roughly it. So we're in a good position in terms of, as you heard from LGFA, the interest rates are really low, and there's more hedging required. It'll get average rate down, further down. In terms of credit rating, the methodology is attached. On balance, we expect no change to our rating. Even those cap issues are there, which is not clear exactly how they will apply the cap. We've asked them, but they won't disclose anything until they come back, hopefully in somewhere between July and September, I think, at this stage. That's sort of the summary of it. Thank you.
Thank you. Councillor Kelvin Clout.
Thanks very much, Mohan. I've just got 3 specific questions, so I'll just go through them. Paragraph 6. So we have $70 million of bank facility which is undrawn. Clearly the fact we have a facility costs us even if we're not using it. Can you explain the nature of that cost? Yes, 20 basis points on the 70. 140,000, and even though we haven't used it. So are we likely to use it? No. Okay. Okay, thank you. Paragraph 16. You talk there about the HIF loans at 4.57%, and then immediately after that you say the 0 interest rate associated with HIF.
Yeah, 4.5% comes about when you allocate that HIF loans at 0%.
Oh, sorry.
The 4.57 comes when they allocate average out HIF loans is 0% to existing debt. That's how the 4.57 is arrived at, and 4.84 is excluding the HIF allocation.
Oh, okay. It's just, it's a bit
Confusing.
yeah, a bit confusing because it sounds like HIF loans are 4.57. Okay, thank you.
No, it's a total average for the
Okay, that's the average. Okay, and then paragraph 26, you talk about requirement to pre-fund all capital expenditure, which is very conservative. I understand that. And then you say, and increases credit risks. So how can it increase credit risk if we are being conservative?
Increases credit risk by, for example, if you borrow $100 million now for the next financial year, you have to go and invest it. So that's where the credit risk is created. So if you invest that $100 million in banks or whatever, if you like go back to 2008 or 7, suddenly increase the risk, if one of those fall over or something like that. Even though we've got policies in place which are restrictive in terms of what we can invest in, but again, increases credit risk, just at a normal.
I mean, do we have surplus funds that we are investing?
We always do. For example, right at the moment, I think we've got $29 million. There's always rates money coming in, going out, so we invest all the time. Yeah.
Councillor Rick Kurek.
Finding the page, we see in terms of the net debt position, closing debt 30 June 2020 of 488. In the consultation document that went out, it was 527, so that's nearly $40 million less. I'm sure it's been on some documents somewhere, but just quickly, what projects were deferred or removed to bring that closing debt down by nearly 40 million? I know we had some discussion last week, which wouldn't be factored into this, but just generally an update.
That was been a number of iterations of the annual plan. So this is a few weeks ago or 6 weeks ago. That's where it came from. And we were adjusting our cash flow forecast and that's where the net debt issue came in. But I know the draft now we're working with, it's about 5 or 8, I think. So I don't look at it as a detailed project, I look at a total consolidated council. So that's where the 488 came from a few weeks ago. Yeah.
Councillor Larry Baldock.
Thank you, Mr. Chair. Mohan, not to count our chickens before they might hatch, the indications of a possible AAA rating for the government would flow through to what sort of cost savings for us. We probably should consider that and wanting the government to spend more to help, projects here, but also there could be other benefits of them sticking to their target.
Initially, the very small benefits. The benefits will be where LGFA distribution with their debt across those big pension funds, which they only invest in AAAs, global ones. So that's where so you get a better distribution. So you might get a bit of a margin reduction. You're talking about 3 or 4 points, not much. So that's the benefit. But in a case of a stressed scenario, they're the ones who maintain their quality. Again, that's where, and we all effectively by default, small saving come through, very small. It'll go through over time, any new borrowings. Yeah. Borrow less money. That's why the 20% of GDP is the one that's one of the indicators for government for this coming week.
Councillor Max Mason.
Thanks, Mohan. Paragraph 26B. Is the one about the key changes proposed by Standard & Poor's, a current cap of 270%. Is that, can you just help me understand, is that's sort of an indicator to the LGFA that the ratio would be to 50%? Is that correct?
Yeah, that's right. So that's still to be retained. Yeah, this is S&P has assigned this based on gross debt, and we're not clear how they apply this 500%. how that will work, and I think we suspect it's to do with the other hemisphere in terms of how they rate Canada and Europe entities. So, and it wouldn't apply to us. The thing is, if you get up to that level of debt, you'll breach all the other covenants, other ratios, or their methodology, the scores will be pretty high, therefore automatic downgrade.
Yeah, I was just sort of seeking to understand why. I mean, that's a massive
Yeah.
increase, and so you're still
Yeah,
understanding
we're
as well.
waiting to hear back from them. Yeah,
The other question I was going to ask is, if I may, supplementary, is in relation to the other ratios that Andrew and John spoke about and used. We don't see much of those ratios, do we? Do you think it would be helpful if the elected members sort of use those a little bit more?
we have them in the annual report because they're well below the limit, so there's not much of a focus on them. And our covenant reporting to our GFA, it's included. It's in our annual report, so it's one of our policy limits as well. So they're always compliant because it's so far away from the limit. It's only the revenue to debt revenue ratio is the only one which is a bit stretched.
Any further questions, Mohan? Perhaps a question, Paul. More frequent reporting of the ratios. Do you see any value in it?
Through the chair, we can absolutely include them, particularly as Mohan alludes to the debt revenue ratio through all of our quarterly reporting. In a low interest environment, the other ratios don't really come into play, but particularly if we're below that other ratio.
Thank you. We have a recommendation. Motion on the agenda. Moved Councillor Kelvin Clout, seconded Councillor Max Mason. Speaking to the recommendation, Councillor Clout.
Just want to say thank you to Mohan and the team as always. They're very diligent and very successful in managing our finances and debt. So this is all looking in the right direction. Thank you.
Any further speakers to the motion? In which case the right to reply is not required. I'll put the motion. All those in favour, please say aye. Against? Abstentions carried. Thank you, Mohan. We'll now move to the next item of business on the agenda. That's DC 119. Fraser Smith, I think, is speaking to this.
Just while Fraser's relocating himself, so this paper was requested from elected members in a previous committee meeting to have more detailed analysis done on where our risk management reserve position sits. We did allude to some of it in the recent annual plan conversations, but Fraser's just done a lot more work and explanation, so I'll hand over to him.
Okay. So really what we've done through this is try and get some feeling for the way our financial risks are trending, and our financial risks are, in terms of when you look at provisions and contingencies, they are trending upwards. And then we're looking at our ability to deal with those financial risks, which we've sort of looked at in terms of our remaining debt capacity. So that's taking the 250% as the top limit and saying how much more could we borrow till we reach that. And then also looking at this risk management reserve as being another way that we can actually create capacity, and both of those are falling. So we've got a situation in terms of the net effect we find ourselves as an increasing financial liability sort of risk and a decreasing ability to actually deal with that. And as I say, one of the mechanisms that we have is this risk management reserve, and this risk management reserve has been decreasing over the last few years. In particular, it went actually into negative last year. There is going to be a large chunk of that was the Bella Vista land purchase, which has been removed from the risk reserve this year, but being offset by increases, particularly around Leaky Homes. And so the risk reserve, while I say it's negative, it is still positive in terms of the actual cash. So the cash position is positive. I think that's figure 2 will show you that. but our net position is also is getting worse as well. What that does is create, I guess, an intergenerational debt going forward. So future ratepayers potentially, if we haven't got enough in that reserve, are effectively going to have to fund those provisions if and when they actually come into existence. This risk has also been separately identified, and I think you've got another presentation on the risk register later. And so it's, this reserve is a specific part that's been identified in there. And so really what we're sort of trying to say is we need to actually work out more of a formal process around this. We're suggesting as an interim measure, we actually highlight that we'll put any rate surpluses, we'll put that through to that. But then we want to really undertake quite a more detailed work on a financial strategy for the next LTP, and we think an actual sort of methodology and process around this risk management reserve would be a really good thing to put together as part of that. But we want to do a much more comprehensive financial strategy for the next LTP.
Councillor Catherine Stewart.
You, through the chair, just have a process question. In our report it says it's in response to an elected member request, which surprises me given how busy we are, and that doesn't normally happen. And can you tell me who was the elected member who requested the information, please?
It was a request that was actually made, I think it was at a PSOC meeting, and it was, I think it was Councillor Robinson that made the actual request at that meeting.
Councillor Kelvin Clout.
Thanks very much, Fraser, as always. The concept of transferring rate surplus to the risk reserve, I mean, I'm personally quite comfortable with that. But what I'm trying to figure out is when we look at one of the reports coming up, DC 130, which then, and we've got the appendix here in printed form, I'm just trying to figure out what exactly is the likely rating surplus this year. Because it's not sort of imminently, just you can't really see it on this.
We obviously can't give you a definitive answer at this stage, but I wouldn't suggest that it's going to be large.
Through the chair, just to add to that, there are a number of items of carry forward of expenditure relating to city plan and ICT work that will basically, any surplus that exists will be carried forward into next year anyway. So at this point in time, we are predicting quite a low surplus to be transferred.
Councillor Larry Baldock.
Thank you, Mr. Chair. Fraser, I just want to clarify two things. One in the report, lest we have a misunderstanding that goes out to the public. Paragraph 7, which talks about the 13.4 million overdrawn, and I think that would kind of be of concern if it's not clearly understood by paragraph 10, the actual 4.2 million in reserve. Can you elaborate on those two? Why do we have an overdrawn, and why actually is there actual cash at the moment of 4.2 in it?
So the difference between the two is the case precedent is actually things that have actually crystallised into actual expenses. So the difference is provisions, which are things that we anticipate will happen in the future, but they haven't actually happened yet. And as I say, it's predominantly around leaky home claims.
If I could just add to that, like the definition we use of a provision is it's more likely rather than less likely to occur. So there is a fairly strong likelihood that the cash component will realise. It's just the timing of it hasn't happened yet.
And secondly, just you made comments about Bella Vista. So we took money from the risk reserve, I imagine, for the difference between the insurance payout and the costs. Can you just explain what happens when we start to get recovery from land sales and so on out there? Is that going to go back into the risk reserve, or does it just go back into?
No, in terms of the capital part, which is actually the purchase, we have removed the entire part. We removed that entire amount from that risk management reserve. So it's actually the costs, the net costs of that transaction at the moment aren't in the risk reserve at all. And our anticipation is that when we sell the land and the properties, we will recover fully on all those costs. So we haven't actually put any provision within the risk reserve itself. The Bella Vista costs that are in there are relating to the operating costs that have come through to council from time to time to approve.
The costs that were in there that you removed were the anticipated costs before it actually happened, or I'm a little bit still a little bit unclear.
We put in that was the actual anticipated settlement, capital settlement of the Bella Vista. So we had put an amount in for there, but that was at 30th of June last year. So we had some certainty around that we were going to have to pay the money out, but we had no certainty around that we were going to get any insurance proceeds in relation to that. And so once the negotiations that were done that enabled us to get the insurance proceeds, we have pulled the full amount of the provision that we stuck through that reserve. We've pulled it out.
Mayor Gregory Brownus.
Yep. Just in regard to other financial risks, paragraph 22, obviously they talk about health and safety risks, changes in legislation, litigation, but one of them there sort of concerns me about counterfeit or inferior building products. And is that something that is becoming more prevalent in New Zealand? And where do we go for help on that? Because it would strike me that if counterfeit building products are coming in, they're coming in through ports, you know, and it could be a sort of a big organised thing. So how prevalent is that? Have we struck it here in Tauranga yet, or is it something that we've just got to keep an eye on through our building services department?
It's not something that's completely crystallised at this stage. It is something that is sort of out there. It was raised at an insurance meeting that we had in Hamilton earlier this year about emerging sort of risks, and it sort of involves things around, a lot of people are buying directly off the internet and things like that, so they're buying household furnishings and taps and things like that, so directly from overseas countries. There was also the aspect around, particularly around steel. I think Steel and Tube imported a lot of steel from China, which has been found to be less than acceptable, and Steel and Tube don't know where that's gone, so, in terms of the locations it's been used. So it is an emerging risk, but it is not something that we have had any claims as yet.
So the further subsequent to that is that, so this steel, nobody knows where it's gone, but if it happens to go in one of our buildings and we don't pick it up, because we're probably not geared up to picking up counterfeit stuff, then we somehow end up liable for it. It's quite worrying.
Councillor Bill Granger.
That was the same question as Councillor Baldock's been answered, thanks.
Any further? We have... Fire away. Move. Councillor Larry Baldock.
You're happy to move A and B?
Do we have a seconder? Councillor Kelvin Clout. Speaking to the motion, Councillor Baldock.
Yeah, I actually, when I read this report, I actually toyed with the idea of moving an amendment to actually start putting something into the risk reserve, because I think the message is pretty clear. We have increasing risks ahead of us, and whilst we have some headroom in our debt capability right now, which means we can get by, this is very serious. And I know the Chair is often heard to say that governance is about strategy and risk. Our responsibility, we know more things at this table than almost anybody else out there in the community in regard to the affairs of council. That's why we're here. And we are presented with this report which says we have things that are trending down in terms of our capability to deal with risk. We ought to take steps to address it. The recommendation sort of is that we need to tackle this in the next LTP. And I'm of a mind right now that, today's not the day. And nor is this AP. We had a go at putting in a couple of % for debt retirement, and that didn't go far, with only 4 votes in favour. But it does bother me enormously in the time that I have been on councils, the tendency to just say yes next year, yes next LTP, yes, 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 and yet we never make reality out of the theory. If dealing with risk and strategy is our primary function, we need to be dealing with it in reality. And I hope I'm back here for the next LTP. None of us know whether that's going to happen, but it has to be dealt with by this council, or whoever is sitting at this table in a couple of years' time will be, I believe, derelict of their responsibilities if we don't start doing either a fund to reduce debt or a fund for risk management, because at any moment that headroom could disappear in terms of the world shocks that hit us, and some of us were here during the global financial crisis, where we saw some pretty big shocks flow through. So for today, I'm happy to support this recommendation, at least to put what small surplus may be into this fund. But I do hope that we move beyond our current situation in the years ahead, and provide the leadership our community requires and expects in terms of governance and dealing with these risk issues.
Seconder.
Thank you very much. I totally agree with Councillor Baldock's assessment there. If you look at all the risks listed on paragraph 22, and I hope the Bay of Plenty Times has a feature article on this, every one of those bullet points has got significant cost attached to it. And so as a community, we need to understand that this is the reality that we face as a city council. So I would definitely like to see this fully discussed and debated in the next LTP. We can't keep our heads buried in the sand on this any longer.
Councillor Max Mason.
Yeah, I'd like to endorse the previous 2 speakers. I would have liked to have seen an amendment to the motion, but there's no point in beating your head against a brick wall. But I think I'd just like to perhaps talk briefly about another risk, and that is a risk of, I guess, losing touch with our younger population here in Tauranga. I guess when you hear the local government funding agency representatives, absolutely and explicitly saying that there's a historical underinvestment in infrastructure, we should be pricking up our ears and actually, listening to that, especially when you consider that here in Tauranga, not only has there been a historical underinvestment in infrastructure, but also we have high growth, high population, very high population, which means more new infrastructure, greenfield developments, etc. So we've got a kind of like a double whammy, and you only have to look at the Durham Street to understand there's additional costs there because of things that they found underneath that weren't expected, etc. So there's and every time we look at a development around here, for example, the Wharf Street, we know that under there's a lot of infrastructure that needs to be replaced. So we have that double whammy, and the baby boomers who are 55 to 75-year-old have a lot to answer for. We really do, the generation now, the younger generation, called Generation Rent, and that's our legacy. We've left. We keep on talking about intergenerational equity, and it is intergenerational theft, as was mentioned earlier on. There's some very negative things that we have that our generation should take responsibility for. They will be, in the words of the immortal Bob Dylan, an angry young tune coming soon, I believe.
Councillor Rick Kurak.
I think one risk the public need to consider is the political risk of a council after the election turning up, which is more spendthrift than this current council lineup is. The numbers are in favour of more constraint around spending, but that could change. That's the risk that we haven't talked about. And that's the way to address future shocks, is of course adjust your capital spending. So that's an option.
Councillor Bill Granger.
Yeah, thank you. Look, certainly support this, and I agree with all the speakers that have shared their comments. As the saying goes, we are a growing city, and we do have growing risks. We just don't know what is around the corner, and I just want to shed a little bit of light in some of the history too. And I can remember in 2005 when we did have, at that time, extreme weather conditions, and we had some major slips in Otamotai, and it was quite a disaster, and that was the start. And of course, from there we've had issues with leaky homes, and of course the Bella Vista. So yeah, what has been mentioned, I'd like to certainly put something forward, but it's it's probably, as Councillor Baldock said, it's just not quite the right timing.
Councillor Terry Malloy.
I obviously shoulder a fairly heavy responsibility here, being a baby boomer. You know, I'd certainly like to support the previous speakers, Councillor Baldock and Mason and Clout. But, you know, I don't want to go into it in any detail now because we've already given it a fairly good hiding, but, you know, there are other risks around the city too that we have to be cognizant of going forward that are a real risk in terms of social and personal tragedy to some extent. So just want to put that out there. I'm not going to go into detail right now, but yes, certainly support the previous mentioned speakers.
Do we have any further speakers to the motion on the table? Right to reply, Councillor Baldock.
Yeah, thank members for their comments. I think it's just one thing I'd like to address, the idea that somehow a future spendthrift council might get elected and run away with the budget is just so mythical. It's amazing. We cannot keep adjusting the capital spending forever. We have to provide for a growing city, and we have been adjusting. In fact, we probably sit here today with the problems we have in congestion because councils in the past have looked at some roading projects and thought, we can put that one off, we can put that one off. We need to keep the rates down, we'll put that one off. And here we are now caught with congestion and a period of probably 10 or 15 years of trying to catch up. You cannot avoid it. I think the Mayor in his questions mentioned the risks that are listed there, and so did Councillor Clout. You almost can't pick up a spade today or a hammer without incurring risk. As soon as you dig into the city and start doing work, you inevitably find stuff underneath the ground you did not know about or anticipate. Durham Street, which we'll come to later in the day, I'm sure, is a very good example. There's only so much you can know. And we have leaky homes. I know the Mayor at one point said he didn't want to approve any more building consents because it almost seems like we get leaky homes every time we do. This is the environment we now live in, and we have to face it. Mildred, we often talk about in this chamber, will not thank us if in 5 or 10 years' time her rates have to go up astronomically all of a sudden because we have run into a wall in regard to this risk of taking care of things.
All around us, look, Councillor Kurak, a good example.
Thank you for that observation, Councillor Granger. There being no possibility of further speakers, as the mover of the motion has spoken, I'll put the motion. All those in favour, please say aye. Against? Abstentions? Carried unanimously. Thank you. We'll now move to the next item on the agenda, which is DC 93. The internal audit update. We have Chris Quest in the chair. Over to you.
Good morning. This report is primarily for information to give you a overview of the current position on internal audit. You'll recall that we took a hiatus on undertaking internal audit activities while we reviewed our approach. So we are currently in the process of recruiting for an internal auditor as a full-time position. And this report contains an overview of the other activities that have been going on within the organisation in the past 12 months or so. So with that in mind, I'll just pass over for any questions on the report.
Done, sorry. Councillor Kelvin Clout.
Thanks very much. Just a couple. There's mention there of not an investigation, I guess it might have been called that, the procurement for the Marine Precinct. So that's been completed by Philip Jones. There was no reference there to the current investigation that I understand that Max Peterson is operating. Do you count that as an internal review, or is that something separate?
Through the chair, we have not included it in this report. One, just because of the timing of it, and secondly, it is quite separate and distinct from the initial procurement review and the other internal audit work.
Okay, thank you. And then the other one is just a minor observation or question. On the bottom of page 71, which is the register of BAU audits and reviews, the health and safety, under health and safety, the very last line, weekly down a health and safety audit. And I'm just intrigued that that happens on a weekly basis. Can someone explain the nature of that report?
I'll get back to you with some more information on the specifics on that. As I mentioned in the main body of the report, one of the items which will be part of the draft internal audit plan, once it's put together and presented to you, will be around how we test all of these items and their effectiveness, but I'll come back on that specific issue.
Chris, I assume that reply to Councillor Clout's question will be by email to all councillors? Thank you.
Yes, I will do.
Councillor Catherine Stewart.
Thank you. With item 20, could we have some information circulated to elected members regarding the reducing of the carbon footprint, what that entails, please? It's to do with Beachside Holiday Park. Thank you.
I will include that in the update as with the previous one.
Right, it's a reasonably comprehensive report. Are there any further questions for Chris? In which case, moved Councillor Kelvin Clout, seconded Councillor Max Mason. Speaking to it.
Yeah, thanks to Chris and the team. As he mentioned, we did take a hiatus from the internal review program, but it's good to see that we as a business as usual anyway, we do undertake quite a lot of internal audits. So happy to move that report.
Any further speakers to the motion? In which case I'll put the motion. All those in favour please say aye. Against? Abstentions? Carried. We now move to item DC 148. We have Nick Swallow.
Good morning. Just before we get into it, I have a couple of small corrections to this report. A very minor point, but apologies. References to Audit, Finance, Risk and Monitoring Committee should actually be to the Finance and Risk Committee. Perhaps some of you may have picked up, but the tables in there have actually gone back slightly too far in time. So you see both the execution of documents tables and the Lagoima tables have gone back into August 2018. They are duplicating the previous report, so this report should actually cover from 31 October 2018 onwards. But that's, like I said, it's just a duplication, so you will have seen it before, but happy to take any questions on either the report or any of the tables attached to it.
Councillor Kelvin Clout.
Thank you. page 87 of the report in that table, which is page 11 of the actual table of executions, or document executions, I should say. It's not that bad a place to work. So there's one, I think 1, 2, 3, 4, 5, 6, 7, about 8 up from the bottom. There's T&C developments where there's a purchase of land for reserve, 700,000. If someone can please come back to us with the size of that reserve, or the size of that plot of land.
Yes, noted. I'll come back directly to you on that.
And all of us, thank you.
Yes, all of you.
Thank you.
Councillor Catherine Stewart.
There's a couple here. One is regarding document number 18410, and it's Ngā Tamarawaho letter to Minister. Is that to do with mobile?
Could I just get the page number that's on?
Page number 80, and the fifth from the bottom. Document number. The little page is page 4.
Yep.
5 up from the bottom. Letter to Minister.
Yes, I believe that'll be related to the mobile site would be my guess, but I'll check with City Development and I can come back directly on that particular one as well.
Thank you. And on the next page, could we please have further information on, it's little page 5, 18425 is a reference for the document number. MB to do with tourism facilities, a fund with regards to camping. If we could have more information on that, please.
Yes, certainly.
Thank you.
Councillor Kelvin Clout.
Thank you. Sorry, I should have mentioned that before. With the Lagoima request register, in the past we've had a list of the number of hours that it took for each request, and I see that that is missing on this particular schedule. It was certainly quite helpful last time to see, the extent that staff have to take to answer some of these, and so it would be very helpful to have that column reinstated, please. Thank you.
Noted. We'll factor that into how we're recording our data and our time spent on Lagoimas.
Councillor Larry Baldock.
Thanks, Mr. Chair. I just note the increased, or it seems to be an increase in number of requests from the New Zealand Taxpayers Union. Is that an increase, or has that been fairly consistent? There's a lot of requests for Lagoimas there.
I would have to go and measure it year by year to see if it's an increase, but my sense is that it went up as a peak about a year ago as the organisation grew. I believe it's sort of something that's been commented on in the wider media, but I think that just reflects, yes, like I said, the size of that organisation growing.
I can see my colleagues assiduously running through the list, checking their comprehensive notes. Are there any further questions of Nick? In which case we have a recommended motion in the agenda. Do I have a mover, please? Moved Councillor Catherine Stewart, seconded Councillor Rick Kurak. Speaking to the motion, Councillor.
No, just to thank the writer for doing the report. It's always good to know what's going on, so thank you for that. Oh, and just if we could have bigger font on the agenda, please.
Any further speakers to the motion? In which case I'll put the motion. All those in favour please say aye. Against? Abstentions? Carried. Thank you. We now move to DC 94.
Good afternoon, councillors. I've actually got the privilege to be here for the next two council reports. So we'll first start off with DC 94. So it's obviously requesting an overspend for the relining of the 525 from Cameron Road to Memorial Park. We've actually found budget through another LIPS code for this financial year. So in total it's a 620k overspend. However, 400k has been allocated, or we've found budget for 400k of that. So what we are requesting is 220k overspend. We've taken it to council just for clarity. Obviously this is within CE's delegation, but we've just brought it forward. So if there's any questions about the report, feel free.
Councillor Catherine Stewart.
Thank you. I don't know who to direct this to, but what can we do to help minimise these overspends? And also, it would be nice if we get underspends to tell us about those as well, if there is any.
Through the chair, I don't know that we're required to report underspends, but it's something. it's something that I think perhaps we should do, just to balance the books. So, as part of the Peterson reviews, it was identified that obviously the way we manage our capital projects is something we need to look at, and we're currently working on a project called a project life cycle review, of which obviously the way we manage the finance is an integral part. So.
Councillor Bill Granger.
Yeah, just supplementary to that question, do we not add some type of contingency fee to sort of assist the possibility on things like that happening?
It's interesting you mentioned that. I guess picking up from the discussions about the project life cycle, there is discussions that we're starting to implement risk funding allowance on projects in and around the unknowns and the unknowns that we might encounter, so the known unknowns and then the unknown unknowns, if that makes any sense, and also to take into account market adjustments. So obviously, as a few speakers spoke about earlier today, tenders are coming in higher than budgets in many cases. This is a prime example of another one that came in over budget at the time. So there is discussions that are taking place at present to allow for contingency or risk funding allowance for things like services, unforeseen ground conditions, tender prices coming in over and exceeding the known budget at the time.
There's no way, probably not, the possibility of notching these into the tenders when they come back to us to include therefore a contingency fee on top.
There's possibility of doing that. You can add them as provisional items and or provisional sums. That'll only increase the tendered price. You can probably keep it offline as a project contingency, not necessarily a contract contingency.
And through the chair, I think just adding to that is what we want to do is more upfront work understanding the risks associated as we design projects. I think in the past we've done a certain amount, but I think there's an opportunity going forward from these learnings to actually do more investigations to understand fully the risks before we proceed with a project.
Yeah, and I think, sorry to continue, but I think the point here is made by Councillor Stewart as regards to many projects, and a good example of that one is Durham Street. There's just things that we do not know as regards to underground, and we strike those, and it certainly runs over the top as regards to overspending for sure.
Councillor Rick Kurak.
Some time ago, when the new roundabout upgrade was happening at the end of Route K at Tauriko there was a significant overspend, and the response and request from staff was to set up a project management office to have a better handle on some of these projects. And I understand there's over 20 people in the office now, but we're still seeing significant construction overruns. You know, there's the issue of the tenders, which is one thing, but when a project is commenced and construction commenced, I think we really need to look at what's happening to continue down this path of quite excessive overruns. You know, there's project variations, of course, it happens, but it seems that project or that initiative to really put a whole lot of resources into the project management area doesn't seem to be working. I'd like the Chief Executive to perhaps have a look at that through his consultant to say, you know, potentially are there any opportunities there to improve that area of our business. Yeah, but perhaps through...
I'm happy to respond. I'll put it on the list. Thank you.
I think far be it for me to speak on behalf of our Chief Executive, but I think the reference to the project lifecycle review project, I think that will give us some insight as to how we improve this thing going forward. So I think the Chief Executive's already ahead on this, but there's clearly work being done. I have Councillor Larry Baldock.
Yeah, in a similar way, and maybe another couple of things for the list, but you know, we are seeing this frequently, third-party underground services and unforeseen physical conditions. So I've got two questions. One, are we using our thermal imaging machine to the max that we can to try and discover what is under the ground, and not in every circumstance will it be usable, but just that's the question. We have a nice piece of equipment there. So that's to you. And then secondly, when these third-party underground services are discovered, it's clearly someone's done their own thing at some point. We come along and dig it up. We try and serve them, I think, by making it then a permanent connection, but there should be some cost recovery there. If this has been stuff done that isn't in our as-built, it's not in our stuff, it's like you wonder where we can go to help recover some of those costs.
Some projects utilise ground penetration radar. We always do the due diligence around dial before you digs and service locations. However, it's not an exact science. There's risk, and then there's risk that has to be borne by the contractor and risk that has to be borne by the principal. We can't de-risk everything to the contractor with regards to below ground conditions and or services. This project and this overspends mainly in relation to the tendered price. So we went out for tender, the tenders were received, they were over budget at that time. The ground conditions and services that we've encountered are relatively minimal compared to the tendered price. So if you look at where the problem may lie, it could be around the initiation of the budgeting for these projects and allocating the risk associated with the known risks and unknown risks to that budget to give ourselves the best opportunity to deliver this project.
Just to add to that, some of the services that we have found, particularly in the next report, are so old they wouldn't appear on as-built information. So there's areas of the city that are 100+ years old, and some of those services are quite elderly as well. So we're just not getting that information when we're asking for the as-built plans.
Yeah, just a quick follow-on, because we will explore it probably more in the next report, but even when they're really old, like someone new today building something has to pay the costs, of connections and everything else, and some of it's substantial. But you get this situation with historic stuff. I'm just wanting to explore whether, maybe they have to contribute to a new connection, which is now being provided. They didn't want it, they didn't ask for it, but actually the reality is they would have needed it. Do we get any cost recovery in those circumstances? And maybe it relates to the next report, in which case we can wait till we get there. But
Yeah, I mean, sometimes they are required to pay a connection fee, but if we are relocating a service to accommodate, say, a rain garden or something like that, then that cost falls on the project, unfortunately.
Councillor Terry Malloy.
Pretty much along the same vein. Apart from the HGD across the harbour, which would be very difficult to cover all eventualities, and there was insurance, but we're having even an arm wrestle over that. We must have a huge volume of experience in the ground conditions and what's happening in our city. The question is that the tender details, when someone submits a tender and they've got details, are the details sufficient for us to be able to scrutinise that and say, we think that is reasonable?
I do feel as if we might be jumping into maybe the Durham discussion a bit earlier in regards to that. I guess my answer to that would be if we've got sufficient time to design and investigate, we reduce the risk of encountering ground conditions and or service issues. And perhaps we can maybe discuss that more in the Durham section, where I guess this DC 94 is mainly in relation to the tendered price coming in exceeding of the original budget, with a few minor variations associated with ground conditions, not to the extent as the next report will has mentioned.
If I might, it wasn't around Durham Street. I didn't have that in mind. It was general. It's, that we actually have the ability to scrutinise the details of some of these tenders to the point where we have the ability and the experience to say that's reasonable, so we don't go accepting something that's unreasonable, and we're also then able to put conditions on it to cover ourselves.
We can. Certain projects can design build certain elements of the subground surfaces, so we can contract that out to the contractor, but we'll pay a premium in general rule of thumb. So it's normally a shared risk ground conditions. Also, as I mentioned before, the more work we do up front, the better will be. So the more time we spend in design and investigating, the better it will be from a tendered document standpoint.
Executive.
Yeah, through the chair. Look, I think this just highlights an issue with process that at the time we received the tender, at that point we knew that if we were going to accept it, it would have been an overspend at that point. Instead of signing off and proceeding, we should have come back and actually reported it prior to accepting the tender. It just highlights an issue with process, which obviously we'll need to address as part of this life cycle review.
Councillor Kelvin Clout.
Yeah, thanks very much. You made mention that there's an offset of 400,000 from another project. So is that a very much directly related project, or is it a totally unrelated project, in which case we're going to have to fund that anyway, like next year, for example? So it's not necessarily a true saving or offset.
No, it's definitely associated with the 525 relining, so it's part of the Timanga umbrella of projects, so it's LIPS 3610, so obviously the relining of the 525, the pump station works, and then the harbour crossing, it's all part of the Timanga program.
And if I can take that under advisement, thank you, Councillor. Observation and question. We can, of course, de-risk projects, but the premium for us that we would pay to the contractor for them to take the full risk would be frightening, I imagine, so it doesn't make sense. I believe is the case. The second thing is, could I have a little bit more detail, just following up Councillor Kelvin Clout's question on the 400. I'm interested to know where the 400 arises from, not the project, but within the project, where, how, why have we got a savings, because that's what it's being presented as. Can you give us a bit more detail on that? I know it's a different project, but it's been brought into the discussion on this project because it's being seen as an offset.
That's correct. I'll probably need to rewind a bit. So when the contract was awarded, it was awarded allocating this Timanga job code, which is basically the renewals of the Timanga wastewater treatment plant work. So when we awarded the contract, it was earmarked that we were going to spend a portion out of the relining lips and then a portion out of the Timanga lips. However, it wasn't at the time realised that we needed to report to council. So it's basically a sub-job within that lips for the renewals of the Timanga wastewater treatment plant assets.
Perhaps I need to clarify. My question is, from what did the 400,000 savings arise?
I'd have to get back to you on that question, Chair.
We could share that with everybody. It would be
Yes.
interesting to know where that's arisen from. It may not necessarily be a good news story. Mover for the motion. There's no further questions with the report. I have a mover for the motion, Councillor Larry Baldock. Do we have a seconder? Councillor Kelvin Clout. Speaking to the motion, Councillor Baldock.
Just make a couple of quick observations. We obviously are looking at process issues and the issue of contingencies, which has been raised. I just hope that we are also looking at the culture that we create at governance, so that we're not creating an atmosphere whereby people are not being realistic about these contingencies, because you really don't get away with anything. The things come home to roost. And when we say we're wanting staff to look for savings so we can get the rates down and so on, we need to be careful that we're not actually contributing to this problem as well. And that in going forward, knowing the complexities of our city and the age of some stuff under the ground, we are going to have to put in some pretty good size contingencies if we want to avoid this kind of reporting continuously. So just make that comment.
Councillor Kelvin Clout. Any further speakers to the motion? In which case I'll put the motion. All those in favour, please say aye. Aye. Against? Abstentions? Carried. I think we have time to move to DC 64. The Brains Trust is still in residence. Back to you.
Thank you, Mr. Chair. DC 64, Durham Street upgrade. Before we get into the details, it's just wanted to say this is an extremely complex project. You only have to walk down there today, you'll see the extent of the works that have been completed on the university side, but also the depth we're having to work to on the car park side of the road to install things like services and rain gardens. So that's why we end up encountering some unknowns, because of the depth of construction required to deliver this quite complex project. And we don't want to be sitting here in front of you today seeking obviously quite a substantial additional amount of money to complete the project. It's not what we want to do. So we've talked about improved processes. As part of what we've learned from this complex project is that we need to put better processes into place to ensure that we don't have to come and report significant overspends like this in the future going forward. So.
Councillor Catherine Stewart.
Thank you. Through the chair, I don't know whether I'm upset or furious about this, but it's a huge increase. And to me, the timing, like why weren't we informed earlier, and what attempt was made to review the budget and the design? That's just a few of the questions I've got.
Look, through the chair, we have signalled on a few occasions that this project was going overspent. It's in the body of the report. Admittedly, we hadn't put figures to you at that time, but we had signalled to you that the project was overrunning and was going to attract additional expenditure at some point in the process.
If I may continue, Mr. Chair.
Please.
I went and had a look a few months ago and I raised concerns with my fellow elected members that it seemed to be overspec. So on a continuum line of 1 to 10, 1 being basic, 10 gold plated, where would this project kind of sit?
Well, it's certainly not gold-plated by any stretch of the imagination. I mean, if you want to see gold-plated projects, then Auckland's got some very good examples of gold-plating stuff. On a scale of 1 to 10, it's difficult to know where to put it. It's certainly not a basic upgrade project. Certainly, if we were just upgrading a road, doing a rehab, then we wouldn't be encountering the problems that we found up there. It's probably over a 5, though, definitely. But that's what the direction of council gave us. They wanted something of a higher spec in the city centre as an attractor to add vibrancy to the city centre area. So that was clear direction from the council at the time.
Through the chair, if I may ask, on page 105 at the bottom it says there was no contract contingency budget or allowance for additional consultancy service, project management, building costs, archaeological services and earthworks monitoring. Can someone explain why that was, why didn't we have those in place?
I can't necessarily answer that in its entirety. This was probably managed in another department at the time. I don't have a comment on that.
Is there or can there be an intention to give the councillor an answer to her question? Can someone come back with an answer to that question?
We'll do our best to provide an answer to the wider elected members on that, yes.
Yeah. So Catherine Stewart?
Is there any opportunity at this point in time to make any changes to reduce the price that you're asking for?
Through the chair, half the project has been, or over half the project has been built now. So to change the scope and the design now would incur more cost. It would actually make the whole look and feel of the place a bit skew. And we've actually been out to the community, and the community have, effectively endorsed the project up there and what they're getting. So it would require a lot more rework and a lot more cost, I think.
I can just follow up. There were design changes apparently on page 106 at the top, 400,000. So what did those design changes involve, please?
I guess it comes down to the larger story of the truncated design period. So council gave us the go-ahead to prioritise Durham Street and Durham Lane back in February of 17. The concept was then approved by council in September of 17, and then in that following December they basically instructed us to proceed with detailed design and construction, and then we tendered in early 2018. So I guess what I'm summarising there is the very tight time frame that we had for a design investigation period to meet in with the tertiary education centre, which is University of Waikato. Very tight for a project of this scale and complexity. That resulted in a design probably not being watertight. We were under the pressures of time frame. We probably didn't have the quality required for a project of this scale. So some of those items there were omitted in the original design that was tendered. It was missed in the schedule of prices. So based on the contract that we've let, it's a variation underneath the contract. However, saying that, these works have to be done. We're providing a high quality whole of life asset that is significantly more than your standard bitumen, tar seal, chip seal, asphalt road with your standard IDC concrete pavement. We're obviously tying into the larger network of the University of Waikato, providing that shared space, providing that amenity upgrade that the community wanted us to provide through there. The utility upgrades that were needed to be done underneath the streetscape works were a necessity. Some of those items, some of those service adjustments, relocations were omitted in the design period due to the short period and truncated design time. However, these were needed to be done, and I think you look at the costs that have been reported in the media and reported in these in this report here are true costs. Now, is there financial tension in there to the best of our ability? I can't say yes because it's not open-tendered. Some of these variations are going to have margins on it and profit on it. However, it's not going to be astronomical. It's relatively in line with market expectations. We couldn't not do the service adjustments and all the service upgrades by laying this type of concrete surface.
I have Councillor Larry Baldock.
My apologies that I didn't email this question earlier, and we might have had an answer here, so it may have to come. But my recollection in regard to the time frame and the urgency early on was that we were in this partnership agreement, so-called, with University of Waikato, and they wanted to ensure that at least around Durham Lane, that this was finished and ready for the opening of the university. And as I recall, they were making a financial contribution, I think, to either design with JazzMax or something. But if that information, it's not in the report that I can see, it may be helpful for us to hear back when that's clarified. There was in a sense a saving by working with them, but it was all around it opening, getting stuff done, and we've run into delays obviously, and it hasn't happened, but particularly the lane was crucial to be progressed as much as possible before the opening of the university, and then they of course managed to pull their opening date ahead of time quite a bit. Can you?
I'm not aware of the contribution, however there was constant liaising and coordination between the project team and the University of Waikato. We catered for their needs during their opening events, and I do believe that we had or we met all of their deadlines that they put forward to us.
When we look at the costs, for me, I'd like to ask the question, could it have cost any less? Because, we didn't want to deliver half a project. Is there anything there that we wouldn't have done? We didn't get to scope it, perhaps, as you said, with the time frame in the beginning, but nevertheless, this job was a big job. And is there anything we could have saved by knowing ahead of time, or is it just what we were going to go into as we started?
Probably what I mentioned earlier. If we knew all of this up front, there would have been more financial tension in the tender, so you would have got sharper rates. But I don't think it's going to be a significant savings. There's also, we could have de-spec'd the design. The rain gardens are a significant cost. They're a significant structure. But then we de-spec the product, and this is a product that was approved as part of the spatial framework. It's gone through council as this is the spec that we want to deliver. So I guess the answer to that is probably not. However you look at it, the square metre rate is in line in value for money compared to Auckland. Even if we look at the VOs and the 3.3 mil, you're looking at about 1,100 a square for Durham Street and Durham Lane. Up in Auckland, they're delivering this type of product. If you replace the pavers with a concrete finish at about 1,500 to 1,900 a square. So there's still value there, and I think what we need to be mindful of is these are actual costs. These costs have to be borne by this upgrade if we want this level of amenity for Durham Street and Durham Lane.
Just to add to that through the chair, that I think if we'd had more time, because there was time pressures of this project, if we had more time, then we would have got a much better handle on obviously the design and the scope, and therefore a better understanding of what we were going to be letting ourselves into, would have come to you earlier with regards a more realistic budget. And I think that's the learning we're taking forward here, is to slow things down a bit. We may deliver less projects, but we'll certainly deliver them a lot better going forward, I think.
I have Mayor Gregory Brownless.
Just with regard to unscheduled items, and it may have sort of been answered in some of your talk, but unscheduled items like garden bed walls and street lighting and cabling, does that sort of say that wasn't included? Is an unscheduled item that something wasn't included and then suddenly we thought of that as we went along?
Those items, I guess if you look at the detail, so we're showing it on the drawings, we're showing it in the specs, but we don't have it listed as a item for them to price in the scheduler prices. Based on the 3910 contract, measure and value, they need to have an item in the scheduler prices for us to pay them. So it's, once again, it goes back to that truncated design period. There was less quality probably put into the design and the tender documents, and that's a result of a omission in the scheduler prices.
I have Councillor Rick Kurek.
Page 106, paragraph 21, refers to the council project structure. Could you speak a little bit to that in terms of what it was and or what you identified as the shortcoming? Because I can see this as quite a significant cause, perhaps, if you can just elaborate on it and give us some feedback.
I think it probably goes back to the risk allowance. I think that we, if you read the report, we set the budget based on the contract value at the time. No contingency or risk allowance, no cost for construction supervision, no cost for any unknowns. So we've done a lot of reflection after we've identified this, and this has been identified since November last year. We've put the flags up saying that we're going to have an overspend. I guess the projects team, the PMO, if you call it, and the Heart of the City team have done a lot of self-reflection about how we look at future projects, taking the lessons from Durham Street, and it's mainly around identifying the risks and costing that. And I think what Martin has mentioned earlier on, it's about being clear and transparent with the budgets. So if at the early on concept stage, the budget will be higher because we don't know certain things. But as we progress through prelim design, detailed design, and then we get to tender, we're going to be a lot more certain about these streetscape upgrades and overall CapEx projects going forward with the new processes. But it realistically comes down to identifying the risks and putting cost to those risks early on.
Thank you, and I do understand that from previous discussion. But the project structure, in terms of addressing that, and that's my interpretation from what you see, it wasn't around the structure. So in terms of the structure, you are looking at potential changes to prevent future occurrences? And what would that be?
That's correct. Sorry for misclarifying that. So there is going to be involvement very early on by project managers, so my team early on with asset owners to identify these risks and to scope the project, help aid and assist the project. So we as a project management office are going to be involved a lot earlier on in the projects to ensure we get these costings more accurate and construction programs more accurate, constructability elements detailed and transparent across the project team. So there'll be a conscious effort to have the PMO involved a lot earlier on in project deliveries.
And just through the chair to add to that, and as the CEO mentioned earlier, this is all part of that project lifecycle process that's being developed and will be live from the 1st of July for the new financial year.
Councillor Max Mason.
I'm just referring to
paragraph 19, say that this created significant time pressure during detailed design phase, resulting in a typical 12-month design process being delivered in 3 months. So the words I'm interested in, typical 12-month design process, you're probably just going to repeat yourself, but it allows me to have a vent. Why does it take 12 months to design a road? You know, I realise the world is complex and there's lots of integrator stuff and all that, but I think people out there we just don't understand that, and somehow we need to, in simple words, understand why these things just take so long and cost.
You're right. It is. I mean, it does sound a long time, and to be honest with you, some projects take longer than 12 months. Depends on the complexity of them. Yeah, a typical roading project is around about 12 months. That's from the initial sort of concept idea. You have to go through a concept design, a preliminary design, a detailed design, get your construction drawings sorted out, your tendering. But there's a number of other steps within those processes as well. You know, peer review, sign-offs, quality assurance, safety auditing, all take a lot of time. So the end product that we're getting is going to last the 30 years, 50 years, or whatever it's designed for, that we don't create issues going forward into the future for our future ratepayers. So, yes, it sounds a long time, but there's a lot of hoops to jump through.
Councillor Kelvin Clout.
Yeah, look, thanks, guys, for being in the hot seat today. Can you explain the level of spec for Durham Street is obviously very high and obviously relatively more expensive. What future projects are going to be having the same spec? Like, in other words, in any new streetscape upgrades, are they all going to come down to the same spec so there's a certain uniformity throughout the city centre?
I think that's the general plan for sort of high-profile areas like the city centre or the Mount. I mean, council has given us a direction that they want Elizabeth Street upgraded in a similar way, Wharf Street, and potentially some other streets. So, you know, the cost for Elizabeth Street is going to be as high, if not higher, than Durham Street, because it's a lot wider road to treat, and there may be things that we find. I mean, I understand from the farmers' development when they were digging their big hole that they came across unforeseen conditions that added a huge cost to their project as well. So it's not just council that are coming across these issues, it's the private sector as well. But coming back to your original question, I suppose ultimately it's down to you guys to decide the level of service and spec you want for these streets.
Any further questions? Mayor Gregory Brownless.
Thank you. Just one thing, when we design things, we have this picture or a plan, okay, and then someone, I guess someone then writes that down and goes to tender. Is that us, or do we go out to third parties to do that for this case?
So council, to my knowledge, we've got very limited design capability, so all of our designs are outsourced to consultants. That's for all aspects of design, geotech, structural, roading design, stormwater design. So we don't do anything in-house. However, we feed into the design, we manage it, we work in with our asset owners. So we contribute to it, but we're not necessarily doing the grunt work, if you will.
So then, if I may continue, so then when it goes to tender, do we do that bit where we write these list of things, or is that once again an outside professional that does that?
It's a combination. So there's different parts of a tender. There's an RFT document that our project managers author. There's the drawings and specifications which the consultants produce with a bill of quantity or schedule of prices and a basis of payment on how they're going to get paid based on the schedule of payments. And then we put together the contract. So it's a joint effort.
If there's stuff left out accidentally or whatever, when we're using an outside contractor to do that and they leave something out, you know, is there any possibility of them contributing towards the costs?
The answer to that is if it's a consultant omission and we can prove that there could be some recourse there.
Any further questions? In which
Happy
I
to
will
move
move
when-
from the chair.
Sorry, thank you, Mr. Chair. Just one other question. If the elected members didn't approve this, what would happen? Extra budget.
Through the chair, I imagine would be entering into some process of arbitration or litigation with the contractor. That would be one of a number of things that would happen, I would assume.
I'm happy to move this from the chair. Take a seconder from the floor. Seconded Councillor Larry Baldock. Speaking to it, it's clearly this is a recommendation to council. We don't have the ability to make effectively the decision in this committee, but we are recommending to council. It seems that there is significant learning to be taken from this. One of the reasons I've chosen to move the motion is because I was actually absent for the initiation of this project, and I suppose can claim some degree of neutrality. I think that I'm hearing that there are significant lessons to be learned, and staff are claiming they are learning those lessons, and I look forward to seeing the results of that, whether I'm back here next triennium or I'm just simply the ratepayer footing the bills. I hope that councillors are also learning the lessons of this. Staff have given us very, very clear message that we must temper our expectations to the capacity and capability. I am pleased to hear a councillor place on record that he struggles to understand the complexity of the process. And I think that's important. I think it's very easy, as many people do, councillors and people in the wider community, to observe that why can't we just get on and do this? But clearly, this project was not given sufficient time to go through a proper process whereby risk could be properly established and properly mitigated. And that's a learning for all of us going forward. And I'm sure that in that project life cycle review, within that life cycle, that early stage of the sort of pre-flight checks, whatever one wants to call them, is getting a significant amount of emphasis. But as the answer that Councillor Stewart makes very clear, I don't think we're in a position to recommend anything other than what's in front of us to council, and it would be pyrrhic and I think thoroughly non-productive to adopt any other approach, which is why I'm happy to recommend the motion. Councillor Baldock.
Yeah, thank you, Mr. Chair. I agree with many of the things you've said. I was keen to move it where you were keen to move as a neutral observer. I was keen because I was chair of the City Transformation Committee, of course, and sort of in doing so take some acknowledgement of the process we've been through. There are lessons to learn through it, and we've discussed those somewhat. And that's an ongoing process. But I think we need to recognise that everything the City Transformation Committee did back in those days was recommended to council, and full council approved all of this. They approved the timeframes, they approved the agreements with the University of Waikato, and we have, I believe, done our best to deliver our part of that agreement so that this facility can be its very best in the community. We need to remember that in 5-10 years' time, this university campus in the centre of our CBD is going to be an incredible, I mean it is now, but it's going to be even more incredible asset to our city. And having a slightly higher spec in the streetscape around it was something we all signed up to, if not by majority. I mean, I'll quickly look into the minutes, but by majority council signed up with it. We agreed to it, and we need to stay the course and complete it. And really this has been one of the most disruptive constructions in the city, which has caused angst for many people. The sooner it's finished and that road is open and we get back to normal around there, the better it will be. We are working with the University of Waikato, and we need to take seriously those agreements or those partnerships we establish. There is a similar one with farmers, and I worry a bit about discussions I hear about Elizabeth Street, but certainly the learnings we've got from here will help us when we get to Elizabeth Street. But we need to remember that farmers have made significant contribution and commitment to the CBD by their redevelopment, and we have had discussions about doing streetscape around them, and in fact Elizabeth Street, there have been some concepts drawn. We need to go into that with our eyes wide open, but we are delivering a new CBD. It is consistent with the spatial plan which has been signed off by Council. And I have been here long enough, though not continuously, to be here when we decided to commit that ground to the University of Waikato, initially on a 33-year lease, and there are people sitting around this table today who voted against that because of the loss of the parking revenue. Now, there are some people probably sitting here today that want to halt this project and whatever. We have to say we are delivering something of great value to this community, to this city, by this university going forward, and we need to complete it and be proud of what we have delivered for the city, I believe. Thank you.
Councillor Catherine Stewart.
Thank you. Just following Councillor Baldock's comments about city transformation, I think a lot of unconstrained thinking perhaps happened back in 2017, and I do remember the council meeting where it came for our approval, and I regret that I did support it. At the time, I certainly didn't wax lyrical about how wonderful it would be, but I reluctantly agreed to support it. It was 6.9. I thought that was a huge budget for a small area, but I did support it, and now to have the blowout of such a huge amount is really, well, it's upsetting, and yeah, it's the ratepayers that are going to have to pick it up, isn't it? In our agenda, it says about contributing to creating a vibrant and successful city centre. Hate that word vibrant, because it's used often in a context which alludes to high spending, and I don't believe you need to spend above average to get a good result. And we will have to be looking at Elizabeth Street, Wharf Street. We can't, it's financially unsustainable to continue on in this manner. It's just ludicrous, given other things that we must do with roading and other projects, water, wastewater. And it also, I think, coming to us at this late stage, it shows us the importance of the projects and monitoring committee that we've now reinstated, how important that is to really watch and understand what's going on with all our projects. And this one certainly fell under the radar by a long shot. So yeah, I'm gutted to have it come to us. I'll support it going to council, but also in the agenda it talks about creating a vibrant and successful city centre. Try telling that to the people in Durham Street whose businesses are badly affected by the length of this project. So, you know, we must understand the impact it has on people. So, yes, I'm not happy at all, but I'll support it going to council.
Councillor Terry Malloy.
Just picking up on what Councillor Stewart said, that impact on people, I think is something that's pretty important. Just want to back that up, and it's not just on Durham Street, it's all around the city, and that's incredibly important. But supporting the motion, you know, as with farmers, there were unforeseen circumstances, and I think we all learn as we go through life, and there's certainly some lessons to be learned from this for all of us. But I'm sure that when it's finished, it's going to be something that we'll all be proud of, and we have to remember too that this is part of a partnership with the University of Waikato, and it's got to be viewed at in the context of the wider city benefit. And
yeah, I think we'll all be proud of it when it's wrapped up. So I will support.
I have Councillor Bill Granger.
Thank you. Yeah, I'll support it, but certainly with a lot of hesitation. I just feel our hands are tied again. And I'm a bit like Councillor Stewart, to the amount of blowout this project has created has blown me out. When we go through the list, not enough sufficient time, unforeseen ground conditions, unknown ground services, archaeological finds, water meters, backflow devices, retaining walls, curing times, paving materials, superior asphalt, additional excavation, soft ground, more reinforcing, etc. We say there are a lot of learnings from this project. Well, I say there are a lot of failures, research, design and planning. And a blowout to this degree, I'm sorry, should not have happened.
Councillor Max Mason.
I think there's a bit of an inherent sort of blame thing going on here against staff, and I think that's governance should be blaming ourselves equally in this. We, as many organisations in the world, operate in increasingly complex situations, both within the organisation and in the operating environment, and as has been mentioned many times today, is around complexity and how you deal with complexity, is that from a staff perspective, an organisational perspective, there has been a lot of learnings as we have discussed, and there's also been a degree of restructuring and looking at the issues around project management and infrastructure development with the CEO and within the organisation. However, there hasn't been any change of a significant level, I believe, whilst there's been some restructuring of the of the committees. There hasn't been a significant change in the makeup of the people on those committees. All throughout the world, in terms of governance, there are an increasing trend, as I said earlier, to have skills-based boards or a greater acknowledgement of the skills that are required. It's all very well having very highly skilled staff and changes and learnings and all the rest of it, but if your people at the governance level don't understand the complexity, then you're in a hiding to nothing, because they're going to be making decisions that are not based on the experience and knowledge that they should have, quite frankly. And I would really like the organisation to consider after the next election that we have an appointed people based on skills, one or two or more in this, whatever committee it ends up, presumably projects and monitoring, that do monitor our projects from a governance perspective. So we get the staff perspective, a good management structure, but also that the skills and experience on the governance level are enhanced by appointed, a couple of people appointed. They don't necessarily have to have votes, but it's their sapiential knowledge and experience that they're bringing to this. This would be a very good way forward for this council, in my opinion.
Do I have any further speakers to the motion on the table? In which case, I'll take the right of reply. One of the privileges of being chair is you get to determine, to a certain extent, speaking order. I've always been a great believer that one should never abuse that privilege. All I was saying is I look forward to this motion and recommendation coming before council, when the mayor will be up here and I will be free to participate into what I'm sure will be an interesting and lively debate. That being said, I put the motion. All those in favour, please say aye. Aye. Against? Abstentions? Carried unanimously. I think we should adjourn for lunch. Thank you.